On impeachment, the FBI warns of armed protests ahead of Joe Biden's inauguration. Europe heads for a double-dip recession. JP Morgan and UBS cut growth prospects for the start of 2021. This as UK Prime Minister Boris Johnson warns that he may tighten lockdown rules in England. Plus, UBS stands by its CEO. The Swiss bank's chairman reiterates his support for Ralph Hamers after a probe of his role in a money laundering scandal at ING. We'll hear from our exclusive interview with Axel Weber. Matt.
All right, let's take a look at futures. They were mixed to higher for most of the morning. We still see green arrows here with bigger gains on the continent than those that you see on in London on the FTSE. Let's take a look at the global macro movers screen. It will show you in the left-hand column equity indexes, and they'll populate. It'll populate as they open up. The FTSE opening up little changed, but to the upside with a gain of 7/100ths of 1%. Typically, the IBEX in Madrid is the next out of the gate in terms of equity indexes across Europe. Sometimes they take a little longer. There you go, the IBEX opening up 1/4%. And then you'll see the CAC 40 open up about 0.2% is the gain there. So we do see European markets opening a little bit higher this morning after a mixed session in Asia. Meanwhile, Morgan Stanley has dropped its expectation of weakening in the dollar amid a shift in U.S. rates. Joining us now is Bob Parker, Quilvest Wealth Management Investment Committee member. And Bob, this seems to be the sort of the play of the day. People are getting on board more and more with this. The dollar has declined enough, it seems, and rates have turned around now. Expectations are for higher 10-year yields. Does this mean, do you agree, is this the end of the downside for the dollar?
I think during January and February, we're going to have a period of consolidation on dollar-euro and dollar-yen. And to quantify that, I think a sort of trading range for the rest of January and going into February of 120 to perhaps sort of 122, 123 as a ceiling on dollar-euro, with the yen retracing to 105. And I think two significant events. The first significant event is obviously this breakthrough of the 10-year U.S. Treasury through 1%, and we're now trading at 115, and that in turn has meant that the yield differential with the Bund market has widened. So we've now got a 10-year U.S. Treasury, 10-year Bund spread of around 165 basis points. So I think that's factor number one, which is dollar supportive. That's obviously against a background whereby, if we'd had this conversation 2 weeks ago, all the positioning by investors and, short-term traders in the FX markets, they were very long the euro. So, what we're seeing at the moment, I think inevitably is a period of profit-taking on those long euro positions. I think so another factor as a background point is that with the Democrat Senate majority going into February, it is inevitable, and President-elect Biden has been very clear on this, that we will have a further fiscal stimulus package. That in turn has led many forecasters, including ourselves, to upgrade our growth outlook for the US for the rest of 2021. And I think it's highly likely that we will see growth in this year, probably above 5% in the US, boosted by that fiscal stimulus. That in turn is a dollar positive. So I think the conclusion is that this sort of trend movement of dollar weakness, we're certainly going through a consolidation. That period of consolidation may last for a long period of time. And certainly, I think FX market volatility will decline.
Okay, and we'll certainly watch what happens with US yields then when we're thinking about the dollar, Bob. And with that in mind, why do you think we're hearing so much messaging from the Fed around tapering and when tapering conversations should start and when tapering itself should start? Is that also because of the move towards further fiscal stimulus with the Democratic administration? Or is it because they're concerned about bubbles? One of our colleagues was writing about this yesterday, saying that maybe actually they're concerned around Bitcoin and around Tesla share prices and others. They won't say that, but is that where do you think this commentary around tapering is coming from the Fed?
Well, I think there are really 4 or 5 different factors. The first factor is clearly we have got evidence because of very high levels of liquidity. That liquidity is resulting not in a systemic bubble in the S&P or the NASDAQ, but we have obviously, and you mentioned too, the Tesla valuation, obviously what has happened with Bitcoin in recent days, the surge in the price last week, the fall in the price so far this week. But clearly those are classic bubble-like characteristics. I think if one looks at other fundamental factors, coming back to my earlier point, if you do get after what would probably be a moderation in the US economy in January and early February, then an acceleration from March onwards, and if we do get 5% plus growth this year, you have to argue that a very easy monetary policy is inconsistent with that acceleration in growth. We've discussed the outlook for fiscal policy. If we do get an easing in fiscal policy, that in turn means you don't need a further easing in monetary policy. And I think another factor which is going to be increasingly discussed by investors over the next 2 to 3 months is inflation. We are going to see a divergence between headline inflation and core inflation. And let's not forget that headline inflation could actually jump quite significantly in April and May. One factor, obviously, is oil prices. If we think that we've now got WTI close to $50 a barrel, last March and April, WTI was in negative territory. Likewise, we've seen a big jump in industrial metals prices, such as copper, and also soft commodities. Corn prices have risen very significantly indeed. So I think that will focus investors' minds on, is this complacency that low inflation will persist? I think increasingly people are going to question that, and the combination of all those factors implies that there will be increasingly a discussion about whether the Fed starts to taper, admittedly very slowly, very cautiously. They don't want to taper tantrum again, but towards the end of this year or going into 2022. They're not going to raise interest rates, but tapering or a moderation in QE, I think, is highly likely.
Yeah, I was reading some analysis that talked about the last time we saw tapering and the period of a couple of years between the start of conversations around tapering and then actually seeing an interest rate rise. So interesting to think about the timescales then and now. Bob, thank you. Stay with us. Bob Parker, Quilvest Wealth Management Investment Committee member, staying with us here on the European Market Open. Just coming up to 7 minutes into the European trading session, political risk, still something that we certainly need to focus on. It's looking unlikely that Donald Trump will resign or be ousted before Joe Biden's inauguration next week. A senior administration official tells Bloomberg that in a meeting with the vice president, Mike Pence, the two men agreed to work together for the remainder of the term. That paves the way for a House impeachment vote, which is expected this week. Joining us now to talk about this, the latest in US politics, is our editor, Kathleen Hunter. Kathleen, good morning to you. So how likely are we to see the House move forward with impeachment?
Well, it seems, Anna, like everything is really building towards that. We're likely to see the House today issue what's probably going to be a largely futile and mostly symbolic ultimatum to Mike Pence, basically demanding that he invoke his constitutional authority under the 25th Amendment to remove Trump from office. Now, we know, as you've said, that Pence met with Trump last night, and the two of them agreed to work together through the end of the term. And so it seems unlikely that Pence is going to take that route. And that sets up a vote as soon as tomorrow in the House on this single article of impeachment that Democrats have put forward. So it seems as though we're moving, pretty swiftly and pretty decisively in that direction unless something were to change.
It does seem, Kate, like this is a bit of a political minefield for Democrats, right? I mean, they're risking the beginning of Joe Biden's term, and they're also risking kind of repeated martyrdom for this president.
Yeah, I think that is a risk there. I think that obviously this time a week ago, before the events that transpired at the Capitol last week, I think Democrats would have said that, they had very little to no interest in entering into another round of impeachment for Trump. They were really looking to get ready to turn the page and start fresh with the Biden administration, particularly after their two wins in the Georgia Senate runoffs last week. We know now they're going to have control of the Senate chamber. And so, now what they're really looking at is stepping into the Biden era with this question about Trump and, potential impeachment, maybe even hanging over them. And so that, certainly will cloud somewhat the early days of Biden's term. He's trying to get members of his cabinet confirmed. He wants to work on a stimulus measure. That being said, though, I think that, what we saw last week was truly unprecedented. And I think that, among Democrats and maybe even quietly among some Republicans, there's a bigger sense that there needs to be some kind of accountability from the president for that.
All right, Kathleen, thanks very much. U.S. politics editor Kathleen Hunter talking about the latest after the Washington, D.C. insurrection. Coming up, Weber exclusive. We'll hear what the UBS chairman has to say about recoveries in China and in Europe as well. This is Bloomberg.
China continues to be, recovering well. And with the opening up that was decided at the last 5-year plan, that is a golden opportunity. But at the moment, we really want to see the dust settle first on international relationships, on China's role in the global economy. The Biden administration is not going to roll back some of the measures in terms of tariffs that have been decided by the Trump administration. But at the same time, they're not going to add new ones. We're probably now going to see a double-dip recession in Europe, where the fourth quarter will be, quite negative, around -2%, and where there is a carryover into the first quarter this year. We expect a pretty strong rebound in the year 21, at the end of 21, and then even, and a carry on into 22. As we come into more normal times, I would expect the normalization of monetary policy to be the right answer. I doubt that the global central banks will give that answer anytime soon.
That was the UBS chairman Axel Weber speaking exclusively to Bloomberg. Bob Parker, Quilvest Wealth Management's investment committee member, is still with us. We got some thoughts there on the state of the global economy from Axel Weber. I want to talk to you about valuations, though, Bob. I was looking with interest at a Bank of America watch list of bear market indicators, if you like, and it's not suggesting we are in one or heading to one, but there are just a number of bear market indicators stacking up. In particular, a basket of companies with weak balance sheets outperforming those with decent balance sheets. Is that a sort of warning sign for you at all?
I think it is a warning sign, but it's not a very powerful warning sign. And if we look at sort of a raft of different indicators, clearly what has changed, as we mentioned earlier, over the last 2 weeks has been this rise in US Treasury yields. And I think that certainly is going to put a constraint on any further upward move in equity markets as we go into sort of the end of the first quarter. And it probably is consistent with this period in January and February of equity market consolidation, which is my short-term central case. Clearly, if you look at market valuations, whether it be in the States or a number of other markets, there are a whole series of areas where the valuations are still very stretched. And, two sectors which, if you look at really all markets across the world, which are stretched, are still the IT sector. A subset of that is obviously communication services. And, the other sector where we're looking at very stretched valuations, most notably in the US and China, is the consumer discretionary sector. Now, having said that, the outlook is increasingly throughout 2021 for an acceleration in corporate earnings growth. And, for example, just on the S&P, the current consensus is that corporate earnings growth this year will be over 20%. There are certain sectors, such as industrials, where after a very bad 2020, corporate earnings growth could be as high as 80%. So, you're looking at a situation where valuations are in many areas very elevated, but the outlook for corporate earnings is quite good. So that's why my conclusion is, yes, we've got a number of warning signals, but those warning signals at the moment are very weak.
Bob, what do you think about private investment in businesses or real estate? I look around here in Berlin, the Kudamm, the Kantstrasse. I see businesses that are no doubt going to fail through this pandemic, and I hear bankers who want to buy this restaurant, that restaurant, even if for the real estate, knowing they can get a cheap price because the seller is in distress. At the same time, I hear a lot of people talking about buying real estate, although if you look in Bronxville, Greenwich, forgive me because I only know the suburbs of New York, those values are stretched because everybody wants to move out there. So those are kind of two ends of the spectrum.
You've got extreme divergence in the real estate market. On the one hand, you have areas in the suburbs, as you mentioned, and it's not just the US, I think it's really across the world, where there is a clear flow of capital wanting to buy real estate assets outside city centers. Likewise, if you look at the logistics business, and linked into that is obviously warehousing and logistics hubs, there the valuations are starting to look stretched. Conversely, commercial office space, frankly, is distressed. You mentioned restaurants, but retail, real estate, whether it's shopping centres, again, they're looking very distressed. Will that divergence continue? I think it's going to be many years before we get convergence. And, what is a distressed asset in offices and retail real estate, I think is going to stay distressed for a long period of time. Coming back to, your other question about private assets excluding real estate, one interesting, I think, valuation metric at the moment is the value of private equity versus publicly listed equity. And, clearly there are many areas in private equity which are cheap relative to elevated publicly listed markets. And I think you're going to see quite a significant jump in 2021 in private equity activity.
All right, Bob, thanks very much for joining us. Bob Parker there, Quilvest Management Investment Committee member. Always a pleasure to talk with you. And Bob will keep the conversation with Anna and myself going at 9 a.m. UK time on Bloomberg Radio. If you're in the city, you can tune in on London DAB Digital. Now let's get the Bloomberg Business Flash. For that, we go back to London and Laura Wright. Laura?
Thanks, Matt. Initial public offerings in London are after their strongest start to the year in well over a decade. A number are already underway, including iconic boot maker Doc Martens. This morning, greeting card maker Moonpig also announced plans to list. The deals are contributing to a long-awaited renaissance of domestic IPOs now that the UK and Brussels have struck a post-Brexit trade deal. Conservative social media platform Parler is suing Amazon for ending its web hosting. The self-described microblogging alternative to Twitter was offline early Monday. Apple and Google also removed it from their app stores over the weekend. Parler's suit claims Amazon's move will kill its business. That's your Bloomberg Business Flash. Matt, Anna.
Laura, thanks very much. Laura Wright here in London. Coming up on the programme, a steep sell-off in Bitcoin is fueling concern that the cryptocurrency bubble may be about to burst. We'll get the latest next. This is Bloomberg.
Welcome back to the European Open. We are 23 minutes into the session right now, and we're looking at green arrows on the continent. The DAX up 0.3%, while the FTSE is little change. Now, the debate about whether or not Bitcoin is in a bubble shows no signs of abating, whether the currency is at 7,000, 10,000, 20,000, 30,000, or 40,000. The parabolic rise took a hit over the weekend, shaking the faith of its followers. Joining us now to discuss more is Eddie Vanderwalt, our Markets Live editor. Eddie, actually, I'd say, you know, we did this story when Bitcoin hit 1,000, and there was huge consensus that that was the most insane bubble since the tulip craze. And yet we're quite a bit beyond that right now.
Right, I was just thinking, I mean, that sums it up, those price levels you were quoting. People have been writing this asset class off forever, and it just keeps coming back. You know, and I mean, I was one of them. I said, you know, we could go to zero, but it just keeps bouncing back. And you know, the idea that people are being scared off by volatility, I don't think that's true. I think people like the volatility. Some people like the volatility in Bitcoin because, yes, they can lose everything, but the potential upside is spectacular.
Interesting to think about volatility and maturity of an asset class then, Eddie. So do we see volatility as a sign of immaturity here or as a sign of maturity? I'm not sure which way I'd sit on that one.
Yeah, so I mean, I think you're right. I think it is definitely a sign that the asset class liquidity is still thin, right? You don't see these really big moves in liquid, well-traded markets. So there's still a problem with liquidity. I think that's part of the cause of the wild volatility. And the other is just that we're still going through the price discovery phase. You know, people, there are still many who say this is worth nothing, and there are others who say this is worth 400,000 plus. So I think we're still looking for that sweet spot in the middle, where Bitcoin will stabilize.
All right, so question number 3 here, Eddie, is written for me. Will the volatility scare off some of the new money in the asset class? Surely, it's the old money that's scared of this asset class, right? Because it's the new money that owns 95% of it.
Yeah, no, I think whether you're scared of the volatility depends on how much you've allocated to it. And I think if people have a small allocation, then watching this sidebar of your portfolio doing these wild things is interesting. But I think it's not bad for the asset class because it gets people talking about it, right? One minute you're at 40,000, the next minute at 30,000, and that attracts headlines and it attracts people into Bitcoin. But I mean, yesterday what we saw was, we talked about there was these scares about tightening regulation and warning from the FCA that the asset class, that people could lose all their money. But really, what we saw was just the rally had gone parabolic and a bit of a pullback. I think it was mostly technical yesterday.
Okay, Eddie, thanks very much for bringing us the perspective. Eddie Vanderwalt, our Markets Live editor. If you're impressed by assets having staying power, then you know it's still here. Maybe that's an achievement all these years on. We will continue that conversation, I do not doubt. Let's talk about some of the movers. Kingfisher rising after the fourth quarter trading update from the home improvement business. Muller-Maersk double upgrade at Berenberg after a surge in freight rates. Not the case for some rivals in the sector. They're falling today. JD Sports coming off yesterday's record high on strong forecasts. That stock down by 2.7%. Up next, we're bringing more of our interview with Clement Beaune, France's junior minister, where he weighs in on UK sovereignty, of course. This is Bloomberg.
Morning, everybody. Anybody likes Japanese yen? So if you do trade Japanese yen and follow in our trades, it's time to sell short. I'm looking to sell short at 104.207. Okay, 104.207. So this is where our signal generated at this price level. So let's see and wait if it will get executed. This level. Just want to remind you, if you would like to get this strategy, you can find it on our website. It's the website written on red ticker. See, all our purchase or CFDs you can see on blue ticker. And again, I want to remind you, this is not demo account or some virtual account. We trade real money. We trade not only our own money, clients' money. And while I was talking, you can see we sold short to open position on Japanese yen at 104.207. Okay, speak to you later, guys.
Welcome back to Bloomberg Markets. This is the European Open. We are now 30 minutes into the trading day. Let's take a look at the stock story so far from the perspective of the stock 600. The European benchmark SXXP is the ticker. Here you can see we've been up and have come down quite a bit here, now only up 1 or 0.2%. If you pull up the GRR, the group ranked returns screen, you'll see that the biggest gainers today are travel and leisure, energy and retail. The losers, auto parts, automakers, chemicals, and media. So a little bit of a mixed picture there as well. Looks like kind of the same balance as we've got in terms of the gains on the stock 600. Let's get the Bloomberg First Word news. For that, we go to Laura Wright. Laura?
Thanks, Matt. Vice President Mike Pence is signaling he has no plans to oust President Trump over the deadly riot on Capitol Hill. Bloomberg sources tell us the two spoke for the first time since the violence, pledging to work together until the end of the term on January 20th. If Pence fails to act, House Democrats are planning to push forward with plans to impeach President Trump again. The UK may need to tighten its lockdown restrictions if people do not follow the rules. That's the latest warning from Prime Minister Boris Johnson, saying any complacency about the disease is misplaced. But he's also risked undermining his own appeal with a 7-mile bike ride across London. Health Secretary Matt Hancock defended the Prime Minister, saying a long walk or cycle ride are allowed. Pfizer and BioNTech are boosting vaccine output by more than 50%. They're now planning to produce 2 billion doses of their COVID-19 shots this year. The vaccine is intended to be given in 2 doses 21 days apart. But some countries, including the UK, have elected to stretch out the time between shots in an effort to vaccinate more people. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg. Matt, Anna.
Laura, thanks very much. Laura Wright here in London with your First Word News update. Now, the UK is officially going it alone after leaving the EU, of course, but uncertainty remains in many key areas. In an exclusive interview with Bloomberg's Maria Tadeo, Clément Beaune, France's junior minister for EU affairs and a close ally of President Emmanuel Macron, said the UK is still not fully sovereign despite Brexit.
The UK has secured in this deal access to the EU markets, which we were ready to provide for, but respecting, in many respects, our rules and our standards, which limits the ability to be fully sovereign, but that's a balance that shows. And I think, in a way, it's not the greatest situation because they will have access to the markets, but they will not decide on the rules of these big EU markets. So I think it's much better, and we should demonstrate it, insist on it, to be within the club and to be able to decide on these rules.
And there's one area that the UK did not get a deal yet, and that's the financial services. That's the passport, and that's the equivalence. That is huge because, I mean, the city of London depends on that. And we have seen some banks, recently Goldman Sachs, moving to Paris for that same reason. There's a lot of uncertainty. And the Prime Minister, he says, we don't have everything we want, but that doesn't mean we can't get it in the future. And perhaps we get it in the future. Do you think that's going to happen in 2-3 years' time? The EU is going to grant full equivalence just like that?
No, passporting is over. That's, you were mentioning the consequences of Brexit. That's a clear-cut consequence of Brexit. So no passporting anymore. And there's no way there can be passporting when you're out of the EU. That's not possible in our legal framework. What is possible, but it's a unilateral decision from the EU to be decided by us 27, is to give equivalence, so possible access to our financial services markets on an ad hoc basis, meaning that you look at the segment of the market you want to give access to, you decide yourself, EU in this case, and you can also revoke this authorization of access. So it's a very, very different world from the one we were living in before 31st of December.
Bloomberg's Maria Tadeo there, speaking exclusively to France's junior minister for EU affairs, Clément Beaune. Maria is here with us now. So, Maria, great interview there. How much is the EU willing to give the UK in terms of the financial services industry? I think that's the $2 trillion a day question.
It is, Matt. And I mean, you pleaded there very little. And the thing about him, and this is why it's interesting to speak to him in particular, is that he is very close to French President Emmanuel Macron, and he is across every subject that has to do with Europe. So it really does give you an insight into the French position, and it really does give you, to some extent, an insight into the mind of Emmanuel Macron. And he was very clear. He said passporting or anything that looks like passporting, that's not going to happen anymore. Equivalence, well, that depends, but the UK should not assume there will be full equivalence. And the thing about it is that this is a unilateral decision. We could decide when to give it, and we could decide when to remove it. So there will be uncertainty. And he also stressed, in his eyes, that the business community and the investment community, they need to grasp, and they still haven't done this, and in his view, the idea that business will change, that things will change in the city. Maybe we haven't seen it. It's been 10 years or 10 days into the year, but that will come in the next few months, and they will become more apparent. Of course, what I would say, the caveat here is that this is the French position. They're always the toughest on the UK, and anything that comes out related to equivalence will be an EU 27 decision. So that could change and soften up. But the French position is very clear. Don't expect, don't assume you're going to get anything.
Yeah, I thought it was interesting, though, how you asked him, is there going to be equivalence? And he said no, then went on to set out why there isn't passporting and why there might be equivalence. So we'll see where that conversation goes, Maria. This, of course, is in relation to Brexit, and the conversations will continue, certainly around financial services. But within the EU's borders itself, Italy is facing its own political crisis. What's happening there at the moment, Maria?
Yes, Anna, and Italian politics, they're at boiling point, and this has been happening now for weeks, but really today is a big day. There is a very important meeting that is happening later tonight. This is very much related to Matteo Renzi, the former Italian prime minister, and the recovery fund. He says it doesn't go beyond, or it doesn't go far enough, it's not ambitious enough, and he could walk out of the government majority. That is a problem for the Conte government because he needs his votes. Otherwise, this government could fall and it could crumble, and this is happening, let's just remember, in the midst of a pandemic and in the midst of the vaccine rollout. So there's two scenarios that are opening up here. One in which we do see the Italian government fall, and that is problematic. Another one, perhaps more benign, in which Matteo Renzi decides to stay. He gains power within the government coalition, but there is no election, and that is the key. That would avoid an election in the midst, as I say, of a pandemic.
All right, Maria, thanks very much. Maria Tadeo in Brussels after her interview with Junior Minister Bohm. Now, up next, big tech turns its back on Trump. Social media giants face an investor backlash as the response. We'll discuss. This is Bloomberg. Welcome back to Bloomberg Markets. This is the European Open. We are 41 minutes into the session and looking at a pretty mixed picture here with the DAX coming down to no change. The CAC and the FTSE now off more than 0.1%. Let's get the Bloomberg Business Flash. For that, we go back to Laura Wright in London. Laura?
Thanks, Matt. The chairman of UBS is reiterating his support for CEO Ralph Hamers after a probe into his role in a money laundering scandal at former employer ING. But Weber is declining to say if Hamers will stay in the job.
We're very convinced that, for us, nothing has changed at this point in time. There's no new news. We're monitoring the situation, and we'll update it as events happen. I'm very confident that he has all the ability to do a good job as CEO of UBS, and that's where we are, and there's no further update on that.
Renault's sales dropped over 20% last year to under 3 million vehicles. That's a steeper drop than the overall 14% slump for the auto market. Electric vehicles were a bright spot for the firm, with the fully electric Zoe more than doubling its sales to 100,000 units. That's your Bloomberg Business Flash. Matt, Anna.
Thanks very much, Laura. Laura Wright here in London. Now, it's looking unlikely that Donald Trump will resign or be ousted before Joe Biden's inauguration next week. A senior administration official tells Bloomberg that in a meeting with his vice president, Mike Pence, the two men agreed to work together for the remainder of the term. That paves the way for a House impeachment vote, which is expected this week. Big tech is also turning its back on Donald Trump. Twitter closed down more than 6% after the platform banned the president, and conservative social network Parler is suing Amazon for pulling its web hosting plan. Joining us now is Alex Webb, who writes about technology for Bloomberg Opinion. We've had a number of conversations with him about this on Bloomberg Radio already. Alex, really good to speak to you to get your take on what we're seeing here. Let's go to the Parler part of the conversation first, and why you think that Amazon Web Services made the decision it did and the response. How do you weigh this all up, given the legislative backdrop in the United States?
Well, I think the substantive stuff is we're seeing that the protest of violence of last week was to a great extent organised on Parler, where now there's now evidence that subsequent efforts, sort of insurrection, essentially, are also being planned, or were also being planned on the service. Now, if you look at the sort of legal side of things, it seems that Parler isn't even imposing its own rules. It has rules about, not inciting violence on its platforms, but its moderation, its moderating efforts just aren't proving adequate. And I think that seems to be the rationale between moves from both Amazon and, of course, from Apple and Google, who have stopped downloads of the Parler app from their respective mobile app stores.
I wonder, it's interesting to see that the Trump administration wants to strip these companies of their protections, which would limit their ability, to allow free speech. And at the same time, the Trump administration or Trump supporters are angry about the limitation of free speech on these platforms. How does that jibe, Alex?
Well, there's a strange dichotomy in the middle of this. We're talking about Article 230, which was a legislation introduced in the 90s, I think under the Clinton administration, which actually was intended to ensure that there was free speech on these platforms, because it can go one of two ways, essentially. It allows free speech on the platforms because the operators are not liable for the content that goes up there. And that tends to actually have been the way that it's been interpreted by the Facebooks and Googles and Twitters of the world. It does also mean that they are not liable if they decide to take stuff down. And that's the way that the sort of Trump side of the equation is interpreting it. So it seems clear there's going to be some sort of update to Article 230, but because there's pressure on it from both the Democrats and the Republicans, but both sides want a different thing.
Right, yeah, so there's some interesting conversations to be had around that particular piece of legislation, Alex. I was reading some analysis yesterday from one of our opinion columnists with the sort of more the cynical view of big tech right now, or these big tech names that we're showing on the screen that have blocked President Trump, Twitter and Facebook, suggesting that, have they done this because the Senate has gone Democrat and they think that they're going to have a tougher ride and that further regulation is coming? Do you draw any links between the way that the Senate has gone and what we're hearing from the technology community?
Yeah, I think there's absolutely, it's making their decisions a lot easier to make. That if the Senate had gone differently, would they be making these calls? It's harder to see. That doesn't mean that they're not the right decisions to make. It, of course, suggests that maybe they should have taken them a little bit earlier. And it's, of course, as we've seen, there's been criticism out of France and Germany from Angela Merkel and others, suggesting that do we really want private companies to be, essentially restricting the speech of a sitting president? Now, I think, personally, and given the current circumstances, it is the right decision to make, because he is, fomenting sort of insurrection in D.C. And I speak for myself when I say it's been quite refreshing not to be scared about what Trump is going to tweet next, because it seems to prompt a huge amount of anxiety around the world.
All right, Alex, thanks very much for joining us. Alex Webb is a technology columnist at Bloomberg Opinion. You can get his opinion and the opinion of his colleagues by typing OPIN-GO on the Bloomberg terminal. Up next, how long will this dollar rebound sustain itself? We put that question to MLive's Laura Cooper next. This is Bloomberg.
Welcome back to the European market open. Around 50 minutes into your trading session this Tuesday morning, European equity markets fairly flat. The FTSE moves to the downside, as does the CAC. The DAX is flat, the IBEX a little bit stronger. So we make very modest gains here for European stocks. Let's take a look at some of the things we're looking ahead to this week. It is a central bank heavy week. Here's what we are watching out for. Today, the Bank of England Deputy Governor, Ben Broadbent, will be speaking on the coronavirus and spending. We also hear from a slew of Fed presidents speaking on racism and the economy. They'll be focused, we understand, on education. Matt?
Meanwhile, on Wednesday, we hear from ECB President Christine Lagarde. She'll be speaking at an online conference on the EU economy post-COVID and post-Brexit. And then the central bank publishes the account of its December monetary policy meeting on Thursday, kicking off another earnings season that is bound to be dominated by the coronavirus pandemic. We get results from major U.S. banks, JP Morgan, Citigroup, and Wells Fargo. Joining us now is Laura Cooper, Bloomberg's MLive macro strategist, to talk about, well, why don't we kick it off, Laura, with the question of the day, which is on the MLive blog, how long will this dollar rebound sustain itself? We've already heard from Morgan Stanley that they're done shorting the greenback. What are you hearing?
Well, I think certainly think, that the factors that underpin dollar weakness so far through the end of 2020, on the case of these falling real yields and brightening growth prospects abroad, those are reversing at the margin. So that is certainly supportive of this dollar bounce that we've seen in recent days. But I think it's too soon to really call it kind of a turning point for the dollar. Notably, I think, what we're seeing right now is really a case of short covering. So just given the fact that, some speculative positions against the dollar are actually still at multi-year highs. So we are seeing some coverage of that. But ultimately, I think it really will depend on whether we see growth outperformance in the U.S., which is going to kind of keep the dollar big going forward, or if we see kind of those rising yields begin to further support the dollar. But I think ultimately the long-term forces are still in play for dollar weakness because we are expecting to see this incredible stimulus, and that will bring with it just these rising deficits.
We saw, even through the violence of last week, Laura, on Capitol Hill, that markets managed to look through that to a large degree and focus instead on the movement in the Senate and what that meant for reflation. Do you see that continuing to be the case as we work our way to January 20th?
Well, certainly that does appear to be the case. If we look at the price action that happened yesterday, even though we are seeing kind of this rising yield environment, the 10-year yield is touching kind of that 115 basis points, we are still seeing this rotation trade intact. So, if we look at growth and tech were the ones that actually came under pressure yesterday, and notably kind of those expensive mega tech stocks. But so long as the yield curve continues to steepen on the back of kind of these rising inflation hopes, on the back of this stimulus-led growth, I would expect that this rotation trade is largely intact. And I think the political turmoil could potentially bring some stumbles, but it's unlikely to really curb that momentum unless we see potential, a recession or kind of economic activity really take a stumble, which isn't baked in the consensus.
Laura, I just wonder if there's any other catalyst besides the virus right now and the Biden administration. Is there anything else we have to watch for besides the virus and stimulus?
Well, I certainly think, U.S. earnings season kicks off with the bank later in the week. Certainly will be watched for in terms of commentary on the outlook ahead. We are expecting some earnings recovery, but, it's clear that commentary will be crucial for that. And then I think what we're hearing from the Fed, there's this increasing chatter about the potential to discuss tapering later in this year. I think markets are really complacent still to the fact that we're going to have this historically low yield environment, indefinitely. And so I think that's not yet being priced in the markets. But certainly if we do see kind of tightening financial conditions risks begin to weigh on stocks, I think, that's something certainly to watch out for.
Yeah, interesting to ask why the Fed is making these comments now, Laura. And I was reading some interesting analysis that suggested it took a couple of years to get from a point of talking about tapering to seeing tapering happen to actually seeing a rate rise. And so maybe they're sort of looking back to last time and mapping a path to maybe a rate rise in 2023 and saying, look, we have to start talking about this now. I suppose that's one of the questions the market is asking. What does this messaging mean from the Fed?
Oh, absolutely. We are seeing markets begin to price in rate hikes in the back end of 2023. Now, that's not yet kind of weighing on kind of this broader relentless risk rally that we're seeing. But certainly, I think the Fed is going to have to position itself for some kind of withdrawal at some point and really try to coax markets into this perception that this environment can't be sustained forever. But if we look back to those previous periods of QE and those rate hikes, really, I think the Fed is dictated by the markets. And so I think if they do attempt to taper like we saw kind of back in 2018, back in 2015, where we saw this resulting tantrum as a result in the market, certainly I would expect them to step in and keep financial conditions easy. So I think it's quite a difficult task ahead for the Fed.
Laura, thanks very much for joining us. Laura Cooper there, Bloomberg's MLive macro strategist out of Europe. You can check out her work and the work of her colleagues by typing MLIV Go on the Bloomberg terminal. Anna?
We are getting some interesting lines coming through from the EU's lead negotiator on COVID-19 vaccines. Worth just mentioning this then, Matt. Sandra Gallina, the EU's lead negotiator, updating MEPs on the status of vaccine approvals. And she is saying that the EU okay, the EU nod for the AstraZeneca vaccine is possible on January 29th. So we have a date in the diary for that one. And of course, they've said yes to Pfizer and BioNTech. They've said yes to Moderna, but the storage and transportation conditions around AstraZeneca perhaps make a meaningful difference, which is why we mention it. So that is it for the European market open. Let's stay with Bloomberg TV. Surveillance is up next. They'll continue to take you through these market movements, and European equity markets then making these really modest moves to the upside. US futures, though, do point a little higher. NASDAQ futures up by 0.25%. This is Bloomberg.
Mike Pence signals he'll continue to work with President Trump as the House moves on impeachment. There's no signs Trump will resign. The FBI warns of armed protests ahead of Joe Biden's inauguration. Europe heads for a double-dip recession. JP Morgan and UBS cut growth prospects for the start of 2021. UK Prime Minister Boris Johnson warns that he may tighten lockdown rules in England. Plus, UBS stands by its chief executive. The Swiss bank's chairman reiterates his support for Ralph Hammers. We'll hear from our exclusive interview with Axel Weber. Well, good morning, everyone, and welcome to Bloomberg Surveillance. I'm Francine Lacqua here in London. Now, if you look at the markets, they're kind of trading sideways. There's not a huge deal to talk about, but it also gives us an indication of what could move the markets, which is central banks, a big week for central banks. And you can see that global stock markets at the moment stabilizing after the losses yesterday. Investors, I guess, feeling a bit more confident about the economic recovery and vaccine rollout, in some cases to buy the dip in certain risk assets. Now, Bitcoin prices resuming their advance, climbing above 36,000. Then I'm looking at energy and travel shares amongst the top gainers in Europe. Now let's get straight to the Bloomberg First Word News. Here in London with me is Leanne Gerrits. Hi, Leanne.
Good morning, Francine. The UK may need to tighten its lockdown restrictions if people don't follow the rules. That's the latest warning from Prime Minister Boris Johnson, saying any complacency about the disease is misplaced. But he's also risked undermining his own appeal with a 7-mile bike ride across London. House Secretary Matt Hancock defended the Prime Minister, saying a long walk or cycle ride are indeed allowed. Now, Pfizer and BioNTech are boosting vaccine output by more than 50%. They're now planning to produce 2 billion doses of their COVID-19 jab this year. The vaccine is intended to be given in 2 doses, 21 days apart. But some countries, including here in the UK, have elected to stretch out the time between the shots in an effort to vaccinate even more people. Italy's governing coalition is at risk of falling apart. Former Prime Minister Matteo Renzi is considering pulling 2 ministers out of the government. His centrist Italy Alive party only controls a handful of lawmakers, but Prime Minister Giuseppe Conte needs their support to command a majority in the Senate. The move could throw the country into a fresh turmoil. And pro football coach Bill Belichick has turned down an offer from President Trump to receive the Presidential Medal of Freedom. The 6-time Super Bowl winner from the New England Patriots had agreed to receive the honor, but that was before last week's riot at the Capitol. Global news 24 hours a day, on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Leanne Gerrits. This is Bloomberg. Francine.
Leanne, thank you so much. Now to our top story, and House Democrats have launched impeachment proceedings against President Trump, and a vote could take place as soon as Wednesday, unless Vice President Mike Pence removes Trump first. Sources say that's very unlikely. Well, Trump and Pence met for the first time since the storming of the U.S. Capitol last week and have pledged to work together through to the end of their terms. Joining us for more is our senior writer, Stephanie Baker. Stephanie, 8 days until Trump goes, and it could be a very boisterous or difficult 8 days. What exactly are you expecting?
Well, just heeding those FBI warnings of possible armed protests at all 50 state capitals and the U.S. Capitol again, I think it's going to be a very tense week ahead of the inauguration. And obviously, it looks like this article of impeachment drawn up by the House does have support of a majority there. So, I would expect that to go ahead on Wednesday. And the real question now is what happens in the Senate with Republican Senate leader Mitch McConnell refusing to bring the Senate back to consider that article of impeachment and start a trial until January 19th. That means that the Senate will have to possibly consider it after Biden is sworn in. And I think Biden does not want to have his first 100 days diverted by this impeachment proceedings. He wants his cabinet confirmed and sworn in. He wants a new stimulus package to be passed. And now it looks like the Senate Democratic leader Chuck Schumer is considering whether he might be able to do both at the same time, spend half the day considering impeachment and the other half confirming Biden's cabinet. So it's really uncertain how this is going to play out. But there is growing calls for impeachment and some kind of response to what happened on Wednesday. Republicans seem to want to pursue something like a censure, but that does seem toothless, really, considering what happened on Wednesday.
Stephanie, even if the Senate convenes on impeachment post the inauguration, is there a chance that they actually get behind impeachment?
I don't think you need 2/3 of the Senate to convict in an impeachment trial, and that means you would need about 17 Republicans to back it. And it does not look like there are 17 Republicans ready to break ranks with Trump to do that. So even if they do proceed, I think the support for that is tenuous. It is extraordinary, given what happened, however, that there have not been more Republicans backing such a move. It does raise questions about impeachment as a check on presidential power. Is it really, does it mean anything anymore? Trump does still have a strong hold on the Republican Party, despite what you've seen this week. Even U.S. companies, for instance, saying that they will not provide donations to Republicans who try to block Biden's electoral college vote confirmation. So, we're in extraordinary times. It's, if there are more protests this week at U.S. state capitals and in Washington, that could perhaps put further pressure on Republicans to act.
But Stephanie, why are Republicans or certain Republicans not ready to act? Do they worry about division in society if we have a second impeachment trial, or are they standing with the president because they think what he's done is not wrong, or are they standing with him because they think that he still holds power, post January 20th?
Well, I think they're saying that, this is not Trump's fault. He may bear some responsibility, but ultimately that, the actions on Wednesday, they claim, do not represent, Trump's Make America Great movement. However, I do think that they are concerned and worried about, Trump's continued support within the Republican ranks, that, if they go against Trump on this and back impeachment, for instance, that they could have Trump mount a challenge to them the next time they have to run for office in a primary challenge, for instance. That the polls indicated that 45% of Republicans backed the armed revolt in Washington. So that just shows how much of a hold Trump does have on the Republican Party. And I think the real issue facing the Republicans is that he could run again in 2024. And with that, he does hold sway over the Republican Party for the next 4 years.
Stephanie, thank you so much. Our senior writer there, Stephanie Baker, following, of course, U.S. politics very closely. Now, coming up, UBS sticks by its new chief executive. The chairman, Axel Weber, tells us why he remains confident in Ralph Hammer's ability, despite a probe into a money laundering scandal and his former employer. That exclusive conversation is coming up next, and this is Bloomberg.
it is critically important that the markets stay open in this time, as opposed to trying to take breaks in the middle. I think that that'll just push off the situation a little bit, but actually could create other pent-up issues if you do close the markets.
Economics, finance, politics. This is Bloomberg Surveillance. I'm Francine Lacqua here in London. Now let's get straight to the Bloomberg Business Flash. Here's Leanne Gerrans. Hi, Leanne.
Good morning, Francine. Bitcoin volatility is fueling concern the cryptocurrency bubble may be about to burst. Bitcoin is rising today, but slid as much as 26% over Sunday and Monday, its biggest two-day drop since March. It wiped out about $185 billion in value since Friday. That's more than the individual market caps of 90% of the companies in the S&P 500. Now, the chairman of UBS is reiterating his support for CEO Ralph Hamers. That is after a probe into his role in a money laundering scandal at former employer ING. But Axel Weber is declining to say if Hamers will stay in the job.
We're very convinced that, for us, nothing has changed at this point in time. There's no new news. We're monitoring the situation, and we'll update it as events happen. I'm very confident that he has all the ability to do a good job as CEO of UBS, and that's where we are, and there's no further update on that.
And that's your Bloomberg Business Flash. Francine.
Leanne, thank you so much. Now let's go to your week book, and here's what you should be watching out for this week. Well, today, Bank of England Deputy Governor Ben Broadbent on the coronavirus and spending. We also hear from a slew of Fed presidents speaking on racism and the economy, focus on education. Meanwhile, on Wednesday, we hear from the ECB President Christine Lagarde. She'll be speaking about the EU economy post-COVID and post-Brexit. The central bank publishes the account for its December monetary policy meeting on Thursday and kicking off another earnings season that's bound to be dominated by the coronavirus pandemic. We also get results from major U.S. banks, JP Morgan, of course, Citigroup and Wells Fargo. Well, joining us now to discuss all of this is Jane Foley, Rabobank Head of FX Strategy. Jane, first of all, if we have an impeachment proceeding, and unlikely that we actually get anything in the Senate, but if it were to go ahead, does that, is there a correlation between impeachment going ahead and dollar?
Well, I don't think there's necessarily going to be a short-term correlation. I mean, we saw last week in the market when we were looking at the news coming out of Washington, the market was very concerned about the Georgian election. It was very concerned about the fact that we're going to get potentially more fiscal spending. That was the focus, not necessarily the violence that we saw on Capitol Hill. But I think if we take this into the longer term, we might see a different pattern. So, for instance, if we look at why the dollar remains the dominant currency in the global payment system, why it is such a big currency in terms of invoicing around the world, and why it remains the dominant currency in FX reserves from central banks. We might over time begin to get a change in that pattern if we do get continued questioning about the state of democracy in the US. So I don't think this necessarily is a short-term factor on the dollar, but it could be a long-term impact.
Jane, longer term, what's the trajectory of, depending on what Biden does in his first 100 days, how does that change longer term trajectory of dollar?
Well, I think we've already seen some of that in the price. And what we've seen, of course, that the big move is the impact on nominal bond yields. We've seen those push higher. We've seen the dollar correct as a result. But, of course, we've also seen inflation expectations push higher because of the expectation of more fiscal spending. And, of course, we know really over the last 9-10 months or so that real interest rates are one of those real big factors which has been undermining the value of the dollar. And real interest rates remain extremely low in the US. So from that point of view, I think what we've been seeing over recent days is an adjustment. The market, of course, has been very short the dollar. We've had this new news come through in terms of the fiscal outlay potentially under a Biden administration. And we've seen the rise of nominal yields. So we've seen a good enough reason, I think, for people to take profits on their dollar shorts. I don't think that we've seen good enough reason yet for that trend to reverse because real interest rates remain very low. So I think as we go through the course of this year, we'll be keeping an eye on not just what nominal bond rates do, but also those inflation expectations, and also, of course, nominal rates in other countries such as the euro and European countries.
Jane, at what level, I don't know if it's a level or how quickly they get there, are treasuries a concern? So, if treasuries at 2%, the yield, is that okay? Does it need to reach 3-4% to become problematic for markets?
Well, I mean, it's quite interesting. Some of the comments really from very many central bankers from the Fed over the last few days suggest that they're not generally concerned at the moment. I think, what they would like to see, of course, is higher rates brought on by better economic growth. I mean, that would be a good outcome for them. I think perhaps what they're also trying to see under the Biden administration is higher growth, higher nominal rates, but also higher inflation too. And certainly we've seen that the Fed signal last year that it was average inflation targeting now. And of course, if we did have higher inflation, that would probably help them out in terms of debt as well. So from that point of view, I think a combination of those three factors is probably an ideal. But for the dollar, that could still mean that we have quite low real interest rates. So that doesn't necessarily mean to say that the dollar would strengthen on the back of that particular outcome. So there is the possibility, of course, that the US economy could recover better than that of the Eurozone. Certainly it did after the global financial crisis. We saw the Fed being able to normalize a little bit of its policy. The ECB could not because of the low inflation in the Eurozone. If that scenario begins to develop, and that could be a couple of years away, maybe it could happen next year, that's, I think, when we'll begin to see the dollar turn around and recover some strength.
Jane, is there anything in the emerging markets that you like right now?
I think emerging markets still look attractive. I think generally speaking, if we look at the background really from the last 9 months, if not for the last few years, what we see is we have this big savings glut, and we have an awful lot of people looking for yield. And even at 2% nominal rates, even if we got back to there, we would still have relatively low interest rates from a historical point of view. And that still means that lots of investors are looking for higher yields. So it is going to be interesting to see what happens with yields. That will really set the tone, I think, for how much risk other investors are likely to take. But I think EM is going to remain attractive as long as interest rates elsewhere in the G10 remain low.
Jane, very quickly, if you look at Europe, I mean, there's concern about what happens in Italian politics. I know we've been here before, but there are also questions about the rollout of the vaccine in Europe. What's the kind of level that the ECB should start looking at?
Well, again, with the ECB, it's often the pace of the move, of course, not just the level. Now, the ECB probably doesn't like the euro even at these sorts of levels, but as long as it's fairly steady, perhaps there is nothing it can potentially do about it. So I think stability, perhaps, from their point of view, is probably a number one criteria right now. But although we've had some bad news in terms of Italy politics and the vaccine rollout in Europe, last week we did have a lot of better than expected German economic data, and that, of course, will bring a lot of relief. Now, if we look at the German data, perhaps because Germany is very orientated towards China and exports, that really did help. French data, industrial production, for instance, remained very weak. But if Germany does manage to keep its head above the water in terms of its economic outlook, that will help the rest of Europe. So there was some good news for Europe last week as well.
Thank you so much, Jane Foley, the Rabobank Head of FX Strategy, joining us this morning. Now, coming up, questions over sovereignty. Clément Beaune, France's Junior Minister for EU Affairs, tells Bloomberg that the world will look very different for the UK post-Brexit. We'll have plenty more on that. This is Bloomberg. This is Bloomberg Surveillance. I'm Francine Lacqua here in London. Now let's talk about Brexit. And the UK has left the EU, but in many areas, uncertainty remains, especially around financial services. In an exclusive interview with Bloomberg's Maria Tadeo, Clément Beaune, France's junior minister for EU affairs and a close ally of French President Emmanuel Macron, says the UK is still not fully sovereign despite Brexit. Take a listen.
The UK has secured in this deal access to the EU markets, which we were ready to provide for, but respecting, in many respects, our rules and our standards, which limits their ability to be fully sovereign, but that's a balance that shows. And I think, in a way, it's not the greatest situation because they will have access to the markets, but they will not decide on the rules of these big EU markets. So I think it's much better, and we should demonstrate it, insist on it, to be within the club and to be able to decide on these rules.
And there's one area that the UK did not get a deal yet, and that's the financial services. That's the passport and that's the equivalence. That is huge because, I mean, the city of London depends on that. And we have seen some banks, recently Goldman Sachs, moving to Paris for that same reason. There's a lot of uncertainty. And the Prime Minister, he says, we don't have everything we want, but that doesn't mean we can't get it in the future. And perhaps we get it in the future. Do you think that's going to happen in 2-3 years' time? The EU is going to grant full equivalence just like that?
No, passporting is over. That's, you were mentioning the consequences of Brexit. That's a clear-cut consequence of Brexit. So no passporting anymore. And there's no way there can be a passporting when you're out of the EU. That's not possible in our legal framework. What is possible, but it's a unilateral decision from the EU to be decided by us 27, is to give equivalence, so possible access to our financial services markets on an ad hoc basis, meaning that you look at the segment of the market you want to give access to. You decide yourself, EU in this case, and you can also revoke this authorization of access. So it's a very, very different world from the one we were living in before 31st of December.
Bloomberg's Maria Tadeo there, speaking exclusively to France's junior minister for EU affairs, Clément Beaune. Now, coming up, the bonus pool just gets smaller. Credit Suisse considers cuts of at least 10%. We, of course, have the details next. We also have more from our interview with the UBS chairman, Axel Weber. They also talk about some of the things out there, including the ability of the chief executive to continue as a probe casts a shadow on his appointment. What else I'm looking at is, of course, the markets. The dollar pretty much steady. Global stocks stabilizing after the losses that we saw yesterday. Investors feeling a little bit more confident about the recovery, but also about the vaccine rollout, maybe some of the...
Okay, ladies and gentlemen, I'm placing a stop on profit for Japanese yen. So anybody who followed my trades and placed an order and the order was executed, you need to place stop on profit at 104.187. Okay, but it depends on the margin the broker allows you to trade. You will see the profit at which it will be executed if it will change direction. Okay, speak to you later, guys. By the way, as you can see on the euro side, to place stop on profit as well, because we had position on euro at 121.663. 121.63, as you can see from our position opening chart we opened yesterday. So right now I place stop on profit for euro at 121.683. Just 2 pips, it will be enough for me. Actually, I will move further to 121.713. Just right here. Okay, 5 pips. I'll speak to you later, guys.
another day of risk off across the financial markets, we bring you special coverage of all the price action and implications here on Bloomberg Television.
I was actually poor.
No foreplay?
Eat your bag of Lay's with a smile on your face.
If all the diseases have been taken, I'll take a tax.
Economics, finance, politics. This is Bloomberg Surveillance. I'm Francine Lacquet here in London. Now let's get straight to the Bloomberg.
As you can see, position closed on euro at 121.713.
Hill. Bloomberg sources tell us the two spoke for the first time since the violence, pledging to work together until the end of term on January the 20th. If Pence fails to act, House Democrats are planning to push forward with plans to impeach President Trump again. Now, the UK is tightening travel restrictions and removing the United Arab Emirates from its quarantine-free travel corridor. That follows an uptick in cases in the Gulf country, which have risen over 50% in the last week. From today, people traveling from the UAE will need to self-isolate for 10 days. And the latest world leader to test positive for COVID-19 is Portuguese President Marcelo Rebelo de Sousa. The 72-year-old is self-isolating, but as of late Monday had no symptoms of the virus. De Sousa is seeking a second term in the presidential election, which is set for the 24th of January. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Leanne Gerrans. This is Bloomberg. Francine.
Leanne, thank you so much. Now, with Democrats clinching control of the Senate, it paves the way for lawmakers to enact bigger spending packages. Bloomberg's Tom McKenzie spoke exclusively to the UBS chairman, Axel Weber, about how that impacts his view of the economic recovery.
We've actually downgraded our short-term projection for the first quarter and for the last quarter of last year. We're probably now going to see a double-dip recession in Europe, where the fourth quarter will be, quite negative, around -2%, and where there is a carryover into the first quarter this year. I think that as vaccination gets rolled out, there is actually light at the end of the tunnel for the second half of this year, with a strong rebound of the global economy, and the way there might be through a double-dip recession. So that's a short-term headwind, but medium to long-term, things are brightening up.
How does that inform your views about equity valuations? Are you concerned about valuations, or are they rational given that outlook?
No, so for the short term, neither the European Central Bank nor the Federal Reserve nor any other major central bank is going to change their programs. That's going to provide some good tailwinds for the global economy. So we expect a pretty strong rebound in the year 21, at the end of 21, and then even, and a carry on into 22.
Okay, you touched on the ECB. It's always worth getting your views on the ECB, of course, given your previous position at the Bundesbank. They have, of course, extended their bond buying purchases by 500 billion euros. They're going to extend that at least until March of 2022. Have the ECB done enough then, do you think?
The current policy measures are extraordinary policies for extraordinary times. As we come into more normal times, I would expect a normalization of monetary policy.
Also, position closed on Japanese yen. So if you close position on Japanese yen, if you followed my trades, well done. You did well this morning. We have profit £200 on this trade.
Number of purchases and continue to reinvest. So this monetary policy will be with us for a long period of time, and I dare say maybe too long, because what we saw last time around is we didn't get to normality in the 10, 12 years after the financial crisis, and that gave us very little room for maneuver at the central banks when we entered into these new crises. Same is true for fiscal policy.
What is the board's current view of the Dutch investigation into the CEO Hummers and these money laundering allegations linked to ING. What is the view of the board at this point?
Regulators have much more means than we as a board to look into this matter, but we're very convinced that, for us, nothing has changed at this point in time. There are no new news. We're monitoring the situation, and we'll update it as events happen.
How confident are you that he will remain as the CEO?
I'm very confident that he has all the ability to do a good job as CEO of UBS, and that's where we are, and there's no further update on that.
Okay, I want to get your views on M&A and consolidation in the banking space. You've been a strong voice on this in the past. What is your view? What is the forecast for consolidation within the banking space this year?
My view, and I've voiced that repeatedly, it should happen in a big bank. There should be a pan-European banking market, and we need to get there not in an evolution over the next 20 years. We need to get there now. And we need to get there because of the challenges coming out of these COVID lockdowns, that finance is needed to channel money where it's best used. And Europe needs a deeper capital market, and that will not happen in a fragmented environment, just as a deep US capital market would have not happened in a fragmented environment across US states. So I think Europe needs to grow into a true union. And in that context, banks will consolidate. You see that at the moment, banks in Europe don't pay dividends. They don't do share buybacks. So they're in quite a different situation than US banks. And in order to be internationally competitive, they need to grow in size. China is a market of size. The US is a market of size. Europe is a fragmented market and lacks size. And that is reflected in the balance sheet and profitability of its banks. We as a Swiss bank are very international. Our major growth is not in Europe. In Europe, we have an historical relationship, but our growth is in China and in the US. And that's where we've invested resources. That's where we're looking into organic and inorganic growth. And when I said in the past, that there will be consolidation, I didn't necessarily mean that UBS will be a consolidator. We do have the strengths to be a consolidator because we have a rock solid balance sheet and, a good capital position. But international acquisitions are very difficult to do. As a chairman, you wouldn't plan them just a few months away from your last year as a chairman.
Should we take from that then, Axel, that Deutsche Bank and BNP Paribas are no longer on your list of potential targets?
There's a lot of acquisitions that don't bring you much further if you're looking at smaller acquisitions than that organic growth of UBS. If we want to grow, and if there are opportunities in wealth management or in asset management, we will take those opportunities. More general retail or universal banking opportunities are a major distraction for many years to come for all banks that go through such an acquisition, and it's not our top priority. Our priority is to grow wealth and asset management organically or inorganically with a global number one. We want to continue to be in that pace, so we need momentum, but we want to also put some distance between us and number two, and that's where inorganic options really become an option.
Well, that was the UBS Group Chair, Axel Weber. Now, Credit Suisse is also considering cuts of at least 10% of its bonus pool. Bloomberg sources say the decision comes after a series of charges hit the lender's profit last year. Now, joining us to discuss all of this is Danny Berger. Danny, how likely is it that Credit Suisse will actually go through with these cuts?
Francine, at this point, it does seem very likely. The lender is just finalizing what the level will actually be at this point. In the coming weeks, sources tell us that they'll start to inform employees. 10% is what we're hearing as the baseline for what these bonus cuts are likely to be, but they could go high as 15%. We have to remember that Credit Suisse has had quite a quarter of struggling. They're set to post a loss for the fourth quarter, and they've had not just these loan losses from COVID hitting them, but also a lot of growing costs when it comes to things like legal fees. $850 million was spent on a U.S. legal case. This does, though, break with the past 2 years of bonus plans at Credit Suisse. They'd kept it more or less flat, and it differs from their rivals. The other big banks, in some cases, and indeed many cases, are planning on increasing the bonuses, at least for traders. Goldman Sachs, JP Morgan, they might see as much as a 20% increase for their traders who really brought this large windfall to the profits for the banks. The same, of course, can't be said when it comes to Credit Suisse and their bonus plans, Francine.
We also found out through the FT that Credit Suisse's former chief executive, Tidjane Thiam, is also planning a new move. He may be starting a SPAC.
Yeah, SPACs have been extremely popular last year. It seems that they'll continue into 2021. So this has caught the eye of Tijan Tiem. His SPAC is said to be valued about $250 million and to be listed in New York. It's going to target financial service firms, so sticking with really what he knows in both developed and emerging markets. The FT also reporting that the investors in this, some of them are sovereign wealth funds, so that's the sort of pool that we can expect to really be participating in this new SPAC, Francine.
Danny, thank you so much. Our Danny Berger there with the very latest on some of these European banks. Now, coming up is a bubble bursting. Bitcoin up today after flirting with the bear market yesterday. We'll look at the outlook for cryptocurrencies next. This is Bloomberg. This is Bloomberg Surveillance. I'm Francine Lacqua here in London. Now let's get straight to the Bloomberg Business Flash. Here's Leanne Gerrans. Hi, Leanne.
Good morning, Francine. Initial public offerings in London are off to their strongest start to the year in well over a decade. A number are already underway, including iconic boot maker Doc Martens. This morning, greeting card maker Moonpig also announced plans to list. The deals are contributing to a long-awaited renaissance of domestic IPOs now that the UK and Brussels have struck a post-Brexit trade deal. Conservative social media platform Parler is suing Amazon for ending its web hosting. The self-described micro-blogging alternative to Twitter was offline early on Monday. Apple and Google also removed it from their app stores over the weekend. Parler's suit claims Amazon's move will kill its business. And Renault sales dropped over 20% last year to under 3 million vehicles. That's a steeper drop than the overall 14% slump for the auto market. Electric vehicles were a bright spot for the firm, with a fully electric Zoe more than doubling its sales to 100,000 units. And that's your Bloomberg Business Flash. Francine.
Thank you so much, Leanne. Now, Bitcoin slid as much as 26% over Sunday and Monday, its biggest two-day drop since March. It's wiped out about $185 billion in value since Friday. Now, Bitcoin up today, but that steep sell-off is fueling concerns that the crypto bubble may be about to burst. Even with recent slide, though, the cryptocurrency has still seen a surge of more than 400% over the course of 2020. Now, one winner of this rally has been a company called Argo Blockchain, a cryptocurrency miner dual listed in the US and the UK. It has rocketed more than 200% in the first trading week of 2021 alone. Well, joining us now, we're delighted, is Peter Wall. He's Argo Blockchain Blockchain Chief Executive Officer. Peter, great to have you on Surveillance. Thank you so much for coming in. Now, for those that are less familiar, with what exactly you do, you mine it, and then do you sell it on, or do you keep it?
Yeah, so we're cryptocurrency miners. We mine primarily Bitcoin. So our computers are out there searching for Bitcoin, verifying transactions on the blockchain. And in exchange for that, we get Bitcoin. When we get Bitcoin, we use some of it to cover our operational costs. And most of it, at this point, we hold because we think Bitcoin is a great asset class and is moving in one direction.
How do you generate the power needed for your operations?
So we have facilities with various hosts in North America. And the primary power source that we have for those facilities is hydroelectric power.
I mean, there's increasing attention about the amount of energy that Bitcoin uses to mine. What are your thoughts on that?
Yeah, look, I think it's a problem that needs to be solved. We need to make sure moving forward that cryptocurrency mining companies are as green as possible. We're fortunate that we have large facilities in Quebec which uses hydroelectric power. And we're always looking for opportunities to bring more renewables into our facilities and to make sure that renewable power is part of our power sources. Cryptocurrency in general, yeah, it does use power, but we think that as the sector matures, there's definitely going to be lots of innovation happening around making sure more green technologies are involved.
So, Peter, how much more? When are you expecting the sector to mature fully, and how much cleaner do you think this mining will be?
Yeah, well, look, it's only 12 years old, Francine. Bitcoin is still a very new technology. I think 2020 we saw lots of institutions coming aboard, which was not, was something that was new. I think the last bull run, when you look back to 2017, 2018, it was really driven by retail interest. But I think in 2020 you saw MicroStrategy really leading the way. Michael Saylor, who's their CEO, decided to put a big chunk of their capital into Bitcoin. And then after that, on board came, Square and Visa and BlackRock and all of these other blue chip institutions. And so as those institutions have come on through the second half of 2020, we've seen more and more interest in the sector grow.
So what are the benefits of investing in a crypto miner instead of actually investing in Bitcoin?
Well, in the same way yeah, it's a great question. In the same way that you would mine, in the same way that you invest in a junior gold miner, you would invest in a cryptocurrency miner. You believe in the sector. You think there's interest in that. You think that it's a growing asset class. You think it's a valuable asset class, and often you can do better returns by holding a mining company in that space. So it's the same in the cryptocurrency space. There's 5 or 6 listed publicly traded miners. Most of them are in North America. We're listed in London. We do have an OTCQB application in place. We also have, off the top there, you said we were dual listed. Not quite right. We have an OTC a trading opportunity or trading ability for people to buy and sell our shares through an OTC component in the U.S. But yeah, essentially that's how it works. It's in the same way that you invest in a junior gold miner, you'd invest in a cryptocurrency miner.
But is it more diversified, or is this a diversification play on Bitcoin, or is it less volatile, do you think? Is it more liquid than Bitcoin?
I think it's similar. Bitcoin is depending on which exchange you're using, is very easy to get in and out of. We've certainly seen lots of volume in our share in our stock in the last month. In London, I think our average trading volume is 30 or 40 million right now. So I think there's lots of interest, there's lots of energy in the space right now, both for actual cryptocurrencies and also cryptocurrency stocks.
What are the risks from regulation and intervention in your space?
Look, it's a maturing sector. So like any sector, there's going to be regulation. It's going to be a dance with regulators, kind of a push and pull. I think we'll see where things land. We think some guardrails are good. Obviously, as a publicly traded company listed in London, we're regulated by the FCA, and I think there may be more regulation required moving forward in the space. But it's still very early days. It's only 12 years into the Bitcoin space.
Peter, I've been going backwards and forwards with one of our star reporters on Bitcoin, Eddie van der Veld, who's also trying to, educate certainly me on exactly some of the concerns going forward. When you look at central banks and possible central bank, more foray into cryptocurrencies, do they still need miners?
It's a good question. I think that they probably don't. I think there's a number of different ways to verify the transactions that are happening in the cryptocurrency space. I think, it's a really interesting development that central banks are looking at bringing their own digital currencies forward. They'll be different than cryptocurrencies because they'll be centralized. They'll be, only authorized by the government, whereas something like Bitcoin is by its very nature decentralized. It's distributed across a network. It's worldwide. So I think again, there's going to be lots. I think soon we'll see a central bank introduce a digital currency. And I think that will spur more innovation in the space, not just for countries, but also for cryptocurrencies in general.
Peter, thank you so much for joining us today. Peter Wall, there, Argo Blockchain Chief Executive Officer. Now, coming up, round two, House Democrats will vote on impeaching President Trump for the second time in just over a year. More on that next, and this is Bloomberg.
Climate change is the defining issue of our time, so we've redefined how we cover it. With clear data and rigorous journalism, we rise to the scale of the challenge to reveal the breadth of possibility. We look at stories from every angle to provoke debate, spotlight solutions, and make sense of the greatest crisis of our generation. Bloomberg Green, solutions for a changing climate.
It is critically important that the markets stay open in this time as opposed to trying to take breaks in the middle. I think that that'll just push off the situation a little bit, but actually could create other pent-up issues if you do close the markets.
Economics, finance, politics. This is Bloomberg Surveillance. I'm Francine Lacqua here in London. Let's get back to our top story. House Democrats have launched impeachment proceedings against President Trump, and a vote could take place as soon as Wednesday, unless Vice President Mike Pence removes Trump first. Sources say that's unlikely. Well, Trump and Pence met for the first time since the storming of the U.S. Capitol last week and have pledged to work together through to the end of their terms. Meanwhile, the FBI is also warning of possible violence around Joe Biden's inauguration next week. Well, joining us now for more more is Rosalind Matheson, our executive editor for International Government. Ros, first of all, how much of the focus in Washington is on the impeachment proceedings, and how much of it is just to make sure that inauguration January 20th is safe for everyone?
Well, that's right. It's a bit of a juggle, really. As you mentioned, the ultimatum to Pence is a symbolic gesture more than anything. So the real focus is on how fast or not the House or the Senate move on the impeachment front. On the House side, of course, things could go quite quickly and be much more straightforward given the Democrat control there. And there does seem to be impetus, at least, to get something done this week. The Senate side is another matter entirely, for now at least. You can't be all that sure that Democrats think that spending their time on this issue is the best use of their time, given the pressing demands on the agenda, like passing economic stimulus. So there's a lot of mixed feelings about this. Some sense that perhaps it's better for Joe Biden just get on in his first 100 days and focus on his agenda and not have this cluttering up the Congress. As you say, it's overhanging the final week of Donald Trump's term, and questions over what that might mean for the inauguration, of course, on January 20 of Joe Biden. A lot of efforts to ensure that that goes smoothly, but of course warnings that there could be protests not just in Washington but all around the country, and some renewed efforts at violence. You're seeing, of course, Donald Trump being very quiet on that front, partly because he's broadly banned on most social media platforms now, but also Republicans are saying that behind the scenes he's accepted some responsibility for what happened, which is another reason that they feel at this point that they should move on and not sort of bed down the Senate, particularly with questions about impeachment of him at this point. One of the things they're mooting instead is the possibility of a censure motion, saying let's do that and then just move on.
Ros, what impact could this have on the U.S. global standing and its relationship with allies?
Well, countries around the world are hoping for a reset. I mean, long-standing allies, that is, who want a more even-keeled relationship with the U.S., a less unpredictable one, a less volatile one, because Donald Trump came after allies and enemies alike. And he also arguably protected some leaders, say in Russia and Turkey and Saudi Arabia, from the pressure that others wanted to bring on them in terms of things like sanctions. So leaders around the world are keen to get talking to Biden, start collaborating more on things like the pandemic and climate change. And their concern, of course, is that they know he'll be very focused on things at home and that international affairs may take a back seat. That's especially if impeachment becomes an issue into the first 100 days, another distraction. The deep issue, of course, is the events at the Capitol and what they show other countries around the world about the idea that the US is a beacon of democracy, that used to give it the right to lecture other countries about human rights or their domestic politics. And that's arguably been on the decline, but further dented by these events. So some big challenges ahead, really, for American leadership internationally.
Ros, thank you so much. Ros Matheson there with the very latest on the U.S. We'll have plenty more on the U.S. We'll look at markets. We'll also look at Europe. This is Bloomberg. another day of risk off across the financial markets. We bring you special coverage of all the price action and implications here on Bloomberg Television. Mike Pence signals he'll continue to work with President Trump as the House moves on impeachment. There's no signs Trump will resign. The FBI warns of armed protests ahead of Joe Biden's inauguration. Europe heads for a double-dip recession. JP Morgan and UBS cut growth prospects for the start of 2021. The UK Prime Minister Boris Johnson warns that he may tighten lockdown rules in England. Plus, UBS stands by its chief executive. The Swiss bank's chairman reiterates his support for Ralph Hammers. We'll hear from our exclusive interview with Axel Weber. Well, good morning, everyone. This is Bloomberg Surveillance. I'm Francine Lacko in London, Tom Keene in New York. Tom, frankly, there's no other story in the world apart from what's happening in the U.S. right now with Democrats nearing the proceedings to impeach President Trump. The other story, of course, is lockdown. So not only vaccines, but just as the UK could tighten lockdown in England, I'm not sure how that's possible given where we are in London. We also hear that Angela Merkel is ready to actually extend some of the measures taken to stop the spread until April.
You know, the lockdown story's out there front and center. I just saw a chart, actually, of the success of Israel versus the known world in getting out the vaccinations. But you're right, Francine, there is no other story. It is about the events. We'll bring you the events through the morning, the president meeting with the vice president yesterday, what we will see on Tuesday, what we'll see on Wednesday. But Francine, far more than that is the drama. And for Republicans and Democrats, the new measurement of the hurt inflicted by this siege at the Capitol.
Yeah, we'll have plenty more on that, Tom, with various angles and, of course, various reporters who were on the ground. Now let's get straight to the Bloomberg First Word News. Here's Ritika Gupta. Hi, Ritika.
Morning, Francine. Tom, Vice President Mike Pence is signaling he'll reject demands to immediately oust President Trump in the wake of the riot at the Capitol. The two met for the first time since the president's supporters stormed the building. According to a senior administration official, they agreed to work together for the last few days of the president's term. Meanwhile, House Democrats are pushing forward with their plans for impeachment. Tension is growing in Washington, D.C. in advance of next week's inauguration. As many as 15,000 National Guard troops will be sent to the city over concern there could be more violence. The FBI is warning there could be armed protests in all 50 state capitals. And the abrupt resignation of acting Homeland Security Secretary Chad Wolf added to the crisis. Wolf is a Trump loyalist, but last week he called on the president to condemn the violence. Major U.S. corporations are punishing congressional Republicans who tried to overturn Joe Biden's election victory. They're vowing to pull their campaign contributions following the riots at the Capitol. The companies range from Goldman Sachs to Dow Chemical to AT&T. Meanwhile, Hallmark is demanding that Senator Josh Hawley and Roger Marshall give the companies money back. And President Xi Jinping has delivered an unusually upbeat assessment about China's future. Xi told a meeting of government officials that time and the situation were on China's side. He repeated a reference to the challenges posed by President Trump's America First policies, but Xi expressed confidence that China would gain in the long run. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg, Tom.
Ritika, thank you so much. Equities, bonds, currencies, commodities. Again, futures up 12, Dow futures up 81. The VIX comes in from a 24 level down to 23.39. I'm going to call it an equity churn over the last couple of days. Francine is riveted by BitDog. I'll let her talk about Bitcoin here in a moment. Yields higher, and it's the way they're higher this morning. 1.15% in the 10-year curve, steepening out to a full stick, 1 percentage points. And also, I would note the dollar churn here. Lots of FX calls. I really want to emphasize this. There's been a research shift from weak dollar to dollar neutral. That's at Deutsche Bank, George Saravellos Publishing, James Lord at Morgan Stanley Publishing, and Matt Mental Block at TD Securities. Mark McCormick, I got it. Francine, I'm just waking up. Excuse me. Mark McCormick at TD Securities just killed it yesterday on not a dollar neutral call, but a dollar strong call.
Tom, you're like me. We feel like it's day 155 of homeschooling.
Yeah, the week's almost over.
Day of 2021. I did speak to a Bitcoin miner earlier, Tom, to just become a bit smarter about exactly what
Why did I not know that?
There you go. And it's also listed Bitcoin miner.
Francine,
so
what is a
Bitcoin
miner? What is a Bitcoin?
They're the ones that mine. So two stories. First of all, Tom, the concern with Bitcoin miners, so you have a limited amount of Bitcoins, Eddie van der Velde also helped me prepare for this, is that they use a lot of energy. So there is a push. I mean, if you look at the amount of energy that some of these Bitcoin miners use, it's the size of a small Eastern European country in certain cases. So it needs to, change with the times and I guess become cleaner. And the second question is, if central banks start issuing cryptocurrencies, then does it mean that they need miners? But we digress, Tom. So let me quickly go into my data check just to look at some of the equities, energy and travel shares among the top stock gains in Europe. I guess investors are feeling a bit more confident about the economic recovery. And you can see Bitcoin 36.95. There you go. That's what Bitcoin is doing right now. Now, Donald Trump, Mike Pence have agreed to work together for the remainder of their term, signaling Trump's VP isn't likely to use the 25th Amendment. That was after House Democrats introduced a resolution to impeach Trump for inciting the storm on the Capitol. The House chamber votes today on a motion urging Pence to oust the president. If he declines, an impeachment vote could come as soon as Wednesday. Now, joining us now is Thomas Gift, UCL Director of Center on U.S. Politics. Thank you so much, Professor Gift, for joining us. For impeachment to work, the Senate needs to also vote by majority on it. I think 75% of senators need to say yes to it. What's the likelihood that that will happen?
Well, they need a 2/3 majority. I think that the likelihood of that is very small. It's even smaller that this would happen before Trump leaves office. In terms of the calendar, it's almost impossible because the Senate is in recess until the 19th. But even if a trial happens after Trump leaves office, the odds of getting 17 or so Republican senators to revolt against Trump, I think, are very minimal. And that's just based on what's happened in the past. Time after time after time, Donald Trump has faced challenges. We saw impeachment 1.0. I think there's very little reason to think that the outcome would be different this time around. And so, many Republicans may be fuming privately about what they saw, but I think turning publicly against the president is something different.
But why are they still with the president? I mean, are there a number of Republicans that are scared of further divisions if we go into an impeachment? Are they worried about retaliation because Trump will stay within the Republican Party and hold power? Or do they think he was right in inciting the mob?
I think it's a combination. We can really talk ad infinitum about the political calculations here. I do think it's largely being set up as a dichotomy between accountability on the one hand and healing divisions on the other. Clearly, inciting insurrection is an extremely serious charge, and there's every reason to understand why certain Congress members, both Democrats and Republicans, think that Trump crossed a line. There needs to be repercussions. And we've seen some come out and say that, Pat Toomey and so on. At the same time, there are legitimate concerns, I think, that impeaching Trump will only instigate the far right, render the kind of social unrest at the Capitol that we saw even more likely going forward, and make Trump a martyr to certain elements of the far right. right. Of course, if Trump ultimately doesn't face a conviction in the Senate, this would allow Trump to loom even larger over American politics, potentially keeping his aspiration of a 2024 bid alive. And so the long-term implication of this might actually be to reinforce political divisions. That needs to be priced in. But I think the bottom line is that Donald Trump still maintains considerable support among 30 to 40% of Americans. That's his base who's stuck with him through thick and thin. And many Republican Congress members know that that support isn't fragile, even if maybe it's starting to wane.
Professor Gift, from your purview of political science, our Sophie Alexander and company report on how the money's being cut off. The money's being cut off to the Trump family, and the donations are being cut off to people that are in support of some of these themes. JP Morgan and others just saying, we're not going to give anymore. I think Comcast was mentioned as well. Discuss the constraint of no cash flow coming into the political machine known as the Republican Party.
Well, that's something that's very, very important. Actually, when it comes to some of these sponsorships, apparently one of the things that gutted Trump the most was the fact that the PGA Tour has withdrawn their support from one of his golf courses. But the Republican Party, kind of the establishment, the machine, it has to be concerned about this. Money doesn't make or break candidates. A lot of times, if you look at the political science literature, it's difficult to disentangle whether candidates who are doing well attract money or money actually allows candidates to do better. But all else equal, of course, the Republican Party needs those campaign contributions to be coming in. It's important thinking how this party is going to go forward. So this is a big deal. Money talks. And if enough donors say, we're just not going to support this anymore, we just are not going to.
Well, they are saying that. So what's the sea change coming out of this debacle? If we move on to President Biden, we move on to a focus on primaries 2022 and all that, assuming these corporations don't turn the switch back on for people supporting the president's allegations of election fraud, I'm using that loosely, folks, what are the ramifications, say, in June of 2021?
Well, I think it all depends whether Donald Trump wants to put his hat in the ring in 2024. Of course, he did finance a considerable portion of his campaign through his own dollars. But still, there are all these down ticket ballots, Congress members, state houses, and so on, that need money to win. And they are going to be very, very, very concerned about this. Maybe it is ultimately the money that's going to speak the loudest volumes, because until this point, very few Congress members, again, despite what they say in private, have been willing to turn publicly on the president. Maybe the dollar figure is what they're looking at.
Thomas Gift, is there appetite from Joe Biden to actually go through with impeachment processes in his first 100 days?
Well, at this point, he has been fairly quiet about it. I do think that a Senate trial and all the media frenzy and attention that comes with it has the potential to seriously distract from Biden's agenda during his first 100 days. And as we know, this is the period when most signature legislative accomplishments get done. So all else equal, I think Biden's White House would prefer not to have this hanging around their neck as they're trying to focus on their agenda. That's especially true given the urgency of all they'll be dealing with in terms of COVID-19, et cetera. Of course, the risks of maybe pushing back a Senate trial, which has been proposed, for example, by Jim Clyburn, is that you lose some of the momentum here. We wouldn't be in the immediate aftermath of the Capitol Hill storming. Tempers might cool a bit, and then maybe there's even less of a chance of getting 17 or so GOP senators on board to turn against Trump. So given the calendar, there's really no ideal outcome, I think, here for Democrats, and they'll just be engaged in a cost-benefit analysis about how to move forward.
Professor Gift, thank you so much. With UCLA, their U.S. Center on U.S. Politics as well. We'll drive forward this discussion. Futures up 10, Dow futures up 68. Joining us, and really timely given the stimulus buildup to come, assumed with President Biden, Glenn Hubbard, the most articulate supply sider. Glenn Hubbard on your debt, your deficit, and rising interest rates. This is Bloomberg. Stay with us. Good morning.
Aragon, how different will the beauty market be in 2-3 years?
We'll see. You know, it's too early to tell, but I would bet that they won't change fundamentally. You know, I have been through many crises, and it won't be very different.
China continues to be, recovering well. And with the opening up that was decided at the last 5-year plan, that is a golden opportunity. But at the moment, we really want to see the dust settle first on international relationships, on China's role in the global economy. The Biden administration is not going to roll back some of the measures in terms of tariffs that have been decided by the Trump administration. But at the same time, they're not going to add new ones. We're probably now going to see a double-dip recession in Europe, where the fourth quarter will be, quite negative, around -2%. And where there is a carryover into the first quarter this year, we expect a pretty strong rebound in the year 21, at the end of 21, and then even, and a carry on into 22. As we come into more normal times, I would expect the normalization of monetary policy to be the right answer. I doubt that the global central banks will give that answer anytime soon.
Axel Weber of UBS with our Tom McKenzie, a spirited conversation on the themes with the former leader of the Bundesbank, as you would expect, obviously representing Union Bank of Switzerland. Right now representing Bloomberg Opinion, Eliza Martinuzzi joins us as we talk about any number of themes of European banking. Eliza, let me start with something that maybe Axel Weber alluded to there with the struggles. Is this the year where we see consolidation in European banking?
But I think, good morning, Tom. I think, we are seeing some consolidation that kick-started, another wave of that kick-started again last year with the pandemic. But you're seeing that, and you have seen that mostly within markets, namely in Spain, in Italy. And there is some hope that at some point that will also bring another wave of consolidation that will be more cross-border to create real European banks that operate across multiple markets. Now, I think the predominant expectation there is that it's a little bit too early for that to happen because the constraints that have held back cross-border consolidation still exist, namely in regulation and oversight, that make it very difficult for banks to move around capital, for example, across borders still to this day. And of course, add to that this fresh wave of the pandemic and the hit on the economy that creates more uncertainty that I think makes it difficult for a bank manager to take the leap and buy another big bank in another country.
We will talk about Deutsche Bank this morning with an American view. Shonali Basak, folks, scheduled to be with us off this bombshell Bloomberg story of Signature Bank, Deutsche Bank, and the Trumps. But separate from that, Eliza, is just simply the state of Deutsche Bank. From where you sit with all of your experience, is Deutsche Bank America's separate and removed from Frankfurt?
I think Deutsche Bank had been getting to a place where, if you look at the headlines of the last 6-12 months, it's been becoming a little bit more boring, which is probably what it wants to be, after having obviously some tumultuous years marked by various allegations and investigations of various wrongdoing right across the globe. It's struggled to generate profit. And it really seems to have been turning a corner. It's obviously been buoyed by the strong markets in 2020, but there really is some optimism that they're finding their stride. Clearly, what we're seeing in the U.S. And particularly what we might see, in probes that I understand are still ongoing, around the financings that involve Donald Trump, that could bring them certainly draw headlines that they could easily do without.
Eliza, there's also talk that Credit Suisse is, for example, considering bonus pools by as much as 10%. How different would this be from their strategies in the past?
Well, I think what you're seeing, right across the board is that, many of the investment banks, many of the banks that have large investment banking businesses did very, extremely well last year. Some of them posting record profits, but of course they have to take into context, the broader the broader state of the bank. And, if you look at Credit Suisse, they're on course to post a fourth quarter loss because they're clearing out the decks, they're setting aside monies to settle legacy issues. And of course, the bank can't ignore that when it's setting its bonuses for the year. Having said that, I think right across the board, you're seeing, bonus pools rising maybe 10, 15%, even at the strongest banks, reflecting that, bottom line at the group level. And I think it'll come down to huge discussion and huge variance between top performers and the bottom performers.
Elisa, thanks so much. Elisa Martinuzzi there of Bloomberg Opinion, joining us this morning on the future of banks. Now, coming up on the Open, Howard Marks, Oaktree Capital co-chairman. That's at 9 a.m. in New York, 2 p.m. in London. And this is Bloomberg.
We have some good news in terms of vaccines and a chance to overcome the health crisis, but we are not there yet.
We need the fiscal stimulus, and we need it relatively quickly, because I can see where the second wave's coming. You can see consumer spending beginning to get impacted again.
What we need surveillance to be stronger. We need public health measures, because you have no other way at the beginning. This is your best weapon, and you need to use it well.
The good news is that both the vaccines and the therapeutics, in particular the antibodies, are coming along and will start to bring that number way down.
We don't just need more investment in public health. We must also rethink how we value health.
I do believe a targeted fiscal stimulus is going to be in order to really begin a more equalized economy.
We explore the trends, investments, and competition of the European ETF industry. Join us on Bloomberg ETF IQ Europe.
This is Bloomberg Surveillance. I'm Ritika Gupta with the Bloomberg Business Flash. Two of Donald Trump's favorite banks are pulling away from him. Bloomberg's learned that Deutsche Bank will refrain from further business with the president and his company. The president owes the German lender more than $300 million. Meanwhile, New York's Signature Bank is cutting ties while pressing for the president's resignation. Signature is closing 2 personal accounts. SoftBank Group's Vision Fund has sold about $2 billion in Uber stock. It's signaling it may cash in more gains in the future. SoftBank bet heavily on ride-sharing startups. Uber shares have more than tripled since hitting their low as last March as the pandemic took hold in the US. And Twitter has stepped up its enforcement in the wake of the riot at the Capitol. It's now permanently banned more than 70,000 accounts dedicated sharing QAnon-associated conspiracy theory content. Last week, Twitter banned President Trump. And that's a Bloomberg Business Flash. Francine.
Thank you so much, Ulrika. Now, this is what the markets are doing right now. They're a bit more stable than they were yesterday, maybe a bit of profit-taking or, investors, Tom, saying that if you look at the economic prospects for the world, they're not as bad as expected right now, and also a bit of, I guess, focus that what we see with the vaccines will just improve. Now, if you look at U.S. futures, they're turning higher. Energy, travel shares in Europe amongst the top gains, and then Bitcoin prices resuming their advances, climbing above, it was above 36,000, now currently at 35,183, Tom.
I'm going to go to Brent crude, 56.52. This is important as commodities continue to lift and oil continues to lift. Again, 56.52 on global oil as well. We're going to do much more for you through the morning. And we have political coverage all over Bloomberg News. Our Kevin Cirilli with sound on nationwide on Bloomberg Radio with a Democrat from Richmond, Virginia. I can't believe I'm saying that. Abigail Spanberger, the Democrat from Richmond, Virginia, on all that's going on, 40 miles to the northeast in Washington. Coming up, James Athey as well of Aberdeen Standard Investments. James Athey on the state of the markets and the new neutral dollar strategy. This is Bloomberg. Good morning.
我开始做直播是在今年年初的时候，主要是去年的话，我们参加更多的是线下的活动。今年大家都知道，由于中国的这个疫情，导致这些线下活动不能办了，所以更多的交流方式在线上。就今年春节之后，主要是开始在线上通过直播的方式跟粉丝进行交流。直播可能对于投资者来说是陪伴投资者，大家讲讲市场啊，讲讲投资的心理啊，这样的话就可以让大家在投资的时候，心情更平缓。平缓的话，才能做到长期持有；长期持有的话，才可能赚钱。相对而言，线上可能覆盖的人群更多，因为可能疫情，很多人在家里看直播的人更多。反而可能，我这个工作可能是反而是受益于疫情的一个工作吧。
明天希望高开赚钱，
祝大家赚大钱。
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
This is a market that
over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
This is Bloomberg Surveillance. Tom and Francine from London and New York. Tom, this is what we're looking at in terms of the market. So the market is a bit more quiet than we saw yesterday. Of course, a lot of the focus is on politics this time and what happens in the final 8 days of the Trump presidency. Now, to talk about the markets, to talk about treasuries, and even much more on negative rates after comments from the UBS chair is James Athey. He's Aberdeen Standard Investments Investment Director. James, as always, thank you for joining us. First of all, how problematic are treasury yields going up?
Morning, Francine. Well, if you listen to the Fed, not problematic at all. I've been a little surprised as to how relaxed they seem, how complacent really they seem. We know from history that they don't always have a perfect understanding of how financial markets operate, and so for me, cheerleading at the moment from the sidelines is a somewhat risky game given how fragile the situation is. Yes, of course, we've seen a mechanical recovery in GDP, but the amount of stimulus that's required to get us to this point, which I don't think anybody would suggest is sustainable, really does raise questions about why you would want to push Treasury yields materially higher at this stage. So there's technical levels. I think we saw the Treasury spike up in March to around 127. There's a Fibonacci level around 129, which Matt Miller was keen for me to mention this morning to you, Tom. I think that's sort of area 127 to 130.
The arrogance. He bought Bitcoin at 4,000, so Miller's killing it here at 35,000 at Bitcoin. Folks, Fibonacci, here's some mathematics, and Mr. Miller knows I'm not a big fan. Continue, Francine.
He's Italian, Tom, so you can fault him for many things. Maybe,
I had a Fibonacci at that little bar on St. Mark's in Venice, yes.
James, when you look at some of the Treasury yield levels, is it you say that for the moment they're not problematic? Is there a level that would bring concerns to the rest of the market, or is it how quickly they get there?
Well, yeah, I never have agreed with this notion. It's how quickly we get there. Realistically, levels do matter. We saw in 2018 when the economy was quote unquote at full employment and was growing strongly, and the Fed was taking back some of the gargantuan stimulus of the previous 10 years, that equities were vulnerable. And the situation here is not comparable in terms of the economic status. The economy has vast problems to deal with because this has been a huge income shock. We're going to see elevated levels of unemployment for quite some time. There are all sorts of structural changes and shifts going on at the same time. And again, fiscal policy has been what's allowed us to get to this point, handing money to people directly in order that they can consume at just a subsistence level. So for me, the economic situation is night and day from then. I don't know where there is a line in the sand, but I think it's much lower than that which we saw in 2018. We'll know when we get there.
James Athey, I've got two disparate questions here. Let's start with the dollar call right now. We're seeing global Wall Street make a shift from a successful weak dollar strategy over to neutral dollar, and a few even talking new strong dollar policy. I know it's away from your remit, but do you have a feeling here the dollar's moved enough and all of a sudden the other side, the ambiguity here clicks in and higher rates means stronger dollar?
Yeah, unfortunately, FX is right in my wheelhouse, Tom. It's a somewhat frustrating market, I have to say. But no, to be honest, what I'm seeing today, what I'm seeing in the first few trading days of this year, fits very much with my prevailing thesis. The market consensus for 2021 was higher yield, steeper yield curve, stronger equities, and all of those performances being large relative to global equivalents. So Treasury yields rising faster than global sovereign yields and US equities rising more than global equities. We're seeing that. That's because it's a US-specific growth boost coming from expansive US fiscal policy. Of course, that has a demand effect on the rest of the world, but first and foremost, this is US exceptionalism. And to me, that's an open and shut case for dollar strength. So the notion that accompanied dollar weakness just purely because the current account deficit may get larger, I was always hugely skeptical of that narrative. Is not a stable equilibrium, in my opinion. And we're seeing that play out this year.
James, I also want to go to an incredibly important story by our Marion Haltvermeyer out of Europe on UBS. And James, we've all been waiting for this, where the banks capitulate to negative interest rates and they start charging their bank accounts at a lower level for the negative interest rate reality. UBS lowers from $607,000 to $280,000. They're going to charge you for the privilege of holding your money there. What does that mean for the European financial system, where retail banking finally steps in and the effect of negative interest rates is felt by the public?
I mean, I just think it's an awful state of affairs, Tom, to be honest. The economic theory underlying this is so full of holes, it looks like a Swiss cheese. The reality is that if you charge consumers for holding money in the bank account, that is not an incentive for them to go out there and just start spending that money willy-nilly to support the economy. The reason that interest rates are negative is because the economy is incredibly weak, has all sorts of challenges, and that's been the case for a decade or more. That I don't think is going to change anytime soon. Certainly not by taxing consumers and making banking a very unprofitable business. So I see this as just being another step along the route to utter sclerosis in the Eurozone.
All right, James, thank you so much. James Athey there of Aberdeen Standard Investments, and we'll talk a bit more about this sclerosis. But first, let's get straight to the Bloomberg First Word News. Here's Ritika Gupta. Hi, Ritika.
Hi, Francine. For the first time since President Trump's supporters stormed the Capitol, the President and Vice President Trump have met. And the Vice President is signaling he'll reject demands to immediately oust the President. Last week, the President publicly criticized Pence for not rejecting ballots during the tallying of the Electoral College votes. Meanwhile, House Democrats are planning an impeachment vote. House Republican leader Kevin McCarthy is still opposed to impeachment, but he's floating other responses, including a censure of President Trump. McCarthy told fellow Republicans on a conference call that the president has acknowledged having some responsibility for the riot at the Capitol. And pro football coach Bill Belichick has turned down an offer from President Trump to receive the Presidential Medal of Freedom. The six-time Super Bowl winner from the New England Patriots had agreed to receive the honor, but that was before last week's riot at the Capitol. And it was a record day for coronavirus vaccinations in the U.S. They rose by 1.25 million yesterday. That's according to data collected by Bloomberg. There have been complaints about the slow rollout of the shots so far. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg, Tom.
Ritika, thanks so much. Coming up on the pandemic, Francine mentioned the lockdowns, really exceptional. And of course, vaccinations, a current theme. Amesh Adalja joins us from Johns Hopkins Center for Health Securities. Futures advance up 9. Stay with us on this Tuesday. This is Bloomberg.
I'm David Weston. Bloomberg Television is reinventing one of the most iconic brands in financial television for a new audience. Join me to see the news program for the clever investor. This is Bloomberg Wall Street Week.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
This is Bloomberg Surveillance. Tom and Francine from London and New York. Now we're back with James Athey of Aberdeen Standard Investments. James, you were pretty scathing about Europe and some of the sclerosis that you see there. If you look at what's happening in the US, what's happening in Europe and elsewhere, where do you actually want to put your money?
Yeah, that's a very good question. I think, US exceptionalism, in my opinion, is not something fleeting. I just think that the setup, the structural setup of the US economy allows it to ride out storms much more easily and return to more cyclical activity. And so I think the cyclical outlook for the US is stronger than almost anywhere else. The problem I have from an investment perspective is that I still have this quaint notion of a value and understanding the price that I'm paying today and what exactly I'm getting for that. And that second filter in terms of an investment process doesn't leave you with many options at all. I think the UK market is still cheap. I still think there's a lot of, investors have basically been eschewing the UK for quite some time because of the whole Brexit scenario. I don't think the Brexit deal is amazing, but I do think that the UK economy is flexible and can adjust as appropriate. So I do think there's some value still in the UK. I think potentially there's some value in Japan, although a lot less than there was 6 or 12 months ago. But really, you're struggling. You're struggling to find anything cheap because we all know that liquidity has just pushed up the price of just about everything without any regard whatsoever for the underlying fundamentals.
James, what part of the UK?
Well, I mean, I don't particularly want to have a whole heap of cyclical exposure, but if I was going to take cyclical exposure, if I was going to buy an equity market, I think the UK equity market actually, partly because of the Brexit stuff that we just briefly talked about, but also just the makeup, the sectoral composition of the FTSE 100 actually probably lends itself to the sort of environment that we're seeing at the moment, which is to say we're seeing a US dollar which is marginally under pressure and has been for quite some time. That's pushing commodity prices higher. We're also seeing yield curves steepening, and given that the UK market has a decent amount of commodities and a decent amount of financial services firms in it, that's actually a pretty decent tailwind. And my expectation is we will see sterling weakening going forward, and the FTSE 100 has a pretty global exposure, and so weaker sterling tends to be good for domestic currency earnings there. So I think there's a few technical tailwinds, and I think UK equities are cheaper than most.
James Athey, does the United Kingdom service sector rebound when this is all over? There's an assumption of that in America. Is it the same assumption there?
Yeah, I think so. I mean, services covers a multitude of sins, so one has to be a little bit careful about being too all-encompassing in describing the service sector in that way. A lot of professional services here in the UK and things that we have been able to export, and particularly to the EU, that's going to be disrupted, not because of COVID, but because of our changing and shifting relationship with the European Union. So long term, absolutely, I think the industry can adjust as necessary and be successful. Short term, it might be a little trickier. Then with respect to COVID itself, you have the more parochial services, local services which are provided, by small and medium enterprises that involve a lot of human interaction, face-to-face contact, hairdressers, local restaurants, bars, what have you, these sorts of things. There's been much more disruption there, and I think that side of both the US and the UK economy is going to be challenged for a lot longer. I'm not as convinced that consumer behavior will revert as quickly, and absolutely that's the area of the economy where I think we're going to see some of the severe supply side destruction, and what that means in terms of pricing power and the strength of businesses that manage to survive, and if they've had to take on a lot of debt, I think that the realities and the costs of that impact on the economy are yet to be known, and I fear they will be larger than many are suspecting. So ultimately, yes, there will be, of course, recovery and things will normalize, possibly a little trickier than some are hoping.
James, thank you so much for joining us today. James Athey, Aberdeen Standard Investments Investment Director. Now, up next, part of our exclusive conversation on the next big risk with Goldman Sachs Senior Director Martin Chavez. That's coming up shortly with Arsenali Bazek. This is Bloomberg.
компьютер открывает новые возможности детям с двигательными ограничениями, которые закованы в своем теле, еще и не могут разговаривать, да? Они не могут никому объяснить, что они хотят, да? А тут получается, что компьютер дает им эти возможности, а компьютер озвучивает то, что хочет ребенок.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Give you a sense of the real-time action. The 10-year yield tumbling now 11 basis points, so continuing in this knee-jerk risk-off feel.
This is Bloomberg Surveillance. I'm Ritika Gupta with the Bloomberg Business Flash. Payments business Checkout.com is now valued at $15 billion. That's after a $450 million investment led by Tiger Global Management. Checkout's valuation is almost triple what it was valued at in a funding round last year. The company processes payments for companies such as Pizza Hut and Coinbase. The F-35 fighter jet is already being flown by the US and 8 other countries, but it remains marred by 871 software and hardware deficiencies. A report says those problems could hurt readiness, missions, or maintenance. The F-35 is built by Lockheed Martin. Verizon is teaming up with United Parcel Service to test the use of 5G drones to deliver packages. The communications company touted the ways that 5G will change the world as the Consumer Electronics Show gone underway in Las Vegas. Verizon and its rivals are trying to get consumer and businesses to embrace the speedier new network. And that is your latest Bloomberg Business Flash. Tom?
Ritika, thanks so much. It is very important to understand somehow global Wall Street continues forward. We're going to get to the immediate news flow with Sonali Basak in a moment. But here, her conversation with Martin Chavez of Goldman Sachs.
The core business model has some challenges that remind me of the pre-regulated banks business model challenges, right? So, and it's nothing particular to these companies. It is just in the nature of untrammeled, unrestricted profit maximization. So if your business model is maximize profits, like every good capitalist enterprise, and if your model is we maximize profits by maximizing advertising revenue, because that's our only stream, and we maximize advertising revenue by maximizing engagement and time on site, and we maximize engagement and time on site by maximizing emotional resonance, particularly outrage, by confirming biases. I mean, as we've seen, this has led to all kinds of consequences that really are classic externalities, right? It's no different in principle from a company that's making some chemical product and just flushing its waste into a river. For the company, it's optimal.
So is that you saying that you're more concerned about the Facebooks and Twitters of the world than you are about the Amazons of the world, just by nature of what they do?
I think, Sonali, it's my nature to just be concerned about everything and everybody. And it's really a classic concern of antitrust regulation, right? What are anti-competitive behaviors that happen when a company has been wildly successful? And what happens when you have completely unrestrained profit maximization? So now the banks have been restrained by having capital and liquidity requirements. It's sensible. And the whole idea of the banking regulation is so that in a negative event, the banks still have collectively sufficient capital to capitalize themselves. They don't have to go to the taxpayer for more capital. I think the same principle applies to all the tech companies. It happens with every industry, going back to automobiles, oil, telecoms, you name it. The industry becomes sufficiently powerful And it's doing what capitalist enterprise is supposed to do, maximize profits. And then the government has to step in and tie those profits to externalities.
Marty Chavez of Goldman Sachs with a voice there on the risk forward for global Wall Street and particularly for his shop. We could continue this discussion, but last night, Sophie Alexander and Sonali Basak broke incredibly important news on the future of the president's family. Sonali Basak joins us right now. Deutsche Bank and Signature Bank. I want to start with a lesser-known story. Signature Bank, Long Island, Scott Shea, they started it up. They handle private accounts. They're going to return $5.3 million to who? Ivanka?
Well, they did work with Ivanka for a long time. As you know, she was on the board of the bank for some time. But yes, to Donald Trump himself, they are looking to distance themselves from the longtime client, right? But they're doing it, as you know, as many people are, at the very tail end of his presidency. They did react directly to the riots and had said that they believe it would be appropriate right now for Trump to resign.
Where does the president put that money? J.P. Morgan says no. Comcast says no on corporate donations to Washington. All the maelstrom that you report on every day. If they get a check for $5.3 million, where do they go with it?
That's an interesting question as it pertains to the banking industry, because there's been a lot of discussion about how Trump starts to broaden his brand as all of these American brands and American companies start to step back from him. So does he start to look abroad again? Of course, we have a big German lender, Deutsche Bank, that's also distancing themselves from Deutsche Bank from Donald Trump at this time.
Okay, so he could set up a Christmas Club account at Commerce Bank. I get it. Deutsche Bank, $300 million. Everybody says that's a lowball number. You're really expert on this. What's the real number that he owes Deutsche Bank?
Well, right now it is $300 million.
You think that's a good number?
Yeah, I think it's a fair number. I think that, remember, Deutsche Bank has come a long way, taken a lot of steps, and Trump's own banker no longer works there. So she resigned pretty recently, and while Deutsche Bank has not said anything on the record about their relationship, as Signature Bank had done and called for a resignation of Trump, we do know, according to our sources, that they are distancing themselves from him right now, though what becomes of that $300 million worth of loans?
Are we going to see many more banks do the same, or have they already done the same? How difficult is it for Wall Street supporters to now distance themselves for Trump now?
Well, what's interesting, Fran, is it's not just about Trump anymore, right? Because you're seeing the big Wall Street banks start to pause their political donations. And if you are J.P. Morgan, for example, and Citigroup, you're pausing it to both political parties, at least for some time. Citigroup, in a memo to employees, reacted directly to money that was directed toward Josh Hawley in 2019. And what they had said was that they won't be supporting candidates who do not respect the rule of law. So it does go beyond Trump. You see Morgan Stanley halting all donations to people who had supported going against the Biden certification. You're seeing Goldman Sachs considering the same decisions here. So it does go beyond Trump, although the Trump question itself, as Tom had mentioned earlier, it does become a complicated story as well.
Sonali, if you look at banks on both sides of the Atlantic, what's their biggest concern for 2021? I know it's different in Europe because they have to deal with negative rates, but overall there's what to do with the economy, and of course also what to do with bonuses.
I think there's long-term risks, right? Because a lot of the damage you're seeing to the economy is not happening tomorrow. A lot of these pressures in the commercial real estate market that are underlying these banks. And then also, remember, it depends on what Biden does. There's evictions around the corner. There's a lot of loans that are currently facing moratoriums right now. But once you start to take away the Band-Aid, what does it look like?
Sonali Basak, it is President Biden. He is a Democrat. Democrats have dealt with Wall Street for years. This is not a big deal. What is your perception of how President Biden and Wall Street will interact?
I think one thing that's interesting so far is that, and you heard Marty Chavez talk about this a little earlier, is they're welcoming regulation to some degree. They expect it.
You can say that with a straight face.
I can say it with a straight face. You heard Marty Chavez talking about a stress test on the big tech firms and saying that we didn't mind having a stress test on the big financial firms to begin with. So they expect regulation, and not just from Biden, from everybody else, Sherrod Brown, others. But, what they want to see is some taking care care of global relationships as well.
I got 14 more questions and not enough time. Chanel Bassick, thank you so much. And of course, an incredibly important story. I saw Margaret Collins out on MSNBC driving forward that Bloomberg story as well last night. Coming up, this is really an important interview. He is someone associated with Growth Matters. Glenn Hubbard, Columbia professor of economics, former chairman of the President's Council of Economic Advisors. Glenn Hubbard, on your growing debt, your growing deficit. Futures up 10, Dow futures up 69. The VIX down 0.85 points. This is Bloomberg. Good morning.
This is Bloomberg Best, your weekly review of the most important business news, analysis, and interviews from Bloomberg Television around the world.
Ken Burns, welcome to Bloomberg Big Decisions.
We have always been a mixture of things. We are always stronger for that mixture.
Growth is a way to stay competitive, delight more and more consumers.
Are you worried that people won't take the vaccine?
We remain concerned about vaccine hesitancy.
What is one word of advice you'll take with you?
Learn how to listen. And that is certainly something that has served me well.
Ankiti, where do you go from here? It's a huge market. It's a huge opportunity. I want to go 100x from here.
Our philosophy is to partner where we can and stand apart when we should.
Our generation's biggest problem.
Climate change is happening.
And the world's most innovative solutions.
Transport, industry, buildings, electricity, all of those things.
Everything you need to know about our changing environment, the politics of global warming.
We can and we will deal with climate change.
In the fight against climate change, Bloomberg Green has you covered.
Substantial further progress means what it says. We'll be looking for an inflation to be substantially closer to our 2% longer run goal before we start making adjustments to our purchases.
That's a long time to be very accommodative, but that's basically the horizon.
They can buy more bonds and they can buy longer maturity bonds, and that would put more downward pressure on long-term interest rates.
This morning, will Speaker Pelosi move forward with an assured and unprecedented second impeachment of the president for being, quote, engaged in insurrection or rebellion? She awaits the vice president. Pence, while he met with Trump, the president blamed, quote, Antifa people for the siege, that according to Axios. President Trump's personal bank, well, they'll return $5.3 million and says Trump should resign. His business bank, Deutsche Bank, they're done with Trump. At some point, they would like the return of over $300 million. And oh, you remember the markets. Yes, the markets. Yields, they move ever higher. Good morning. Nice chart. Good morning, everyone. Bloomberg surveillance in New York and London as well. There's such a focus on America, Francine. I really want to start with the United Kingdom. We saw that headline from Merkel out 30, 40 minutes ago of a further lockdown for 10 days. What's the level of lockdown you observe in London right now?
Yeah, it's another 10 weeks, Tom. So in Germany, actually, the lockdown would bring us to April. But again, there's lockdowns and there are lockdowns. I would, say that what we're seeing here in England is that it's a complete lockdown. So actually, when the Prime Minister says that he wants to be even more severe, given that all kids are at home, unless you're a kid of a key worker, it would be very difficult to do a lot more apart from enforced mask wearing outside. The one thing, Tom, that is capturing the imagination of a lot of UK residents is a controversy. Boris Johnson doing a huge bike ride 7 miles away from his house. And people say, well, is that legal? Is he breaking the rules?
Is it?
Why would he do that when he's urging everyone to stay at home? It's not. It's actually not illegal. So we've looked into it. It's not illegal because you can do sports, but it goes against, a lot of people are saying, the spirit of staying at home. 7 miles from home is a long way away, Tom.
Francine, that's been my excuse since March, that all activities are illegal. Don't say that. They're listening.
Me too. I stopped doing sports only because of that.
They're listening at home as well. Seriously, folks, we are so U.S.-centric right now that I thought we really needed to get that in there. Significant news in Asia, and of course, the Secretary of State on Yemen as well, just beneath the fold on this historic Tuesday. With our first heard news in New York is Ritika Gupta.
Thanks, Tom. Vice President Mike Pence is signaling he'll reject demands to immediately oust President Trump in the wake of the riot at the Capitol. The two met for the first time since the president's supporters stormed the building. According to a senior administration official, they agreed to work together for the last few days of the president's term. Meanwhile, House Democrats are pushing forward with their plans for impeachment. Tension is growing in Washington, D.C. in advance of next week's inauguration. As many as 15,000 National Guard troops will be sent to the city over concern there could be more violence. The FBI is warning there could be armed protests in all 50 state capitals, and the abrupt resignation of acting Homeland Security Secretary Chad Wolf added to the crisis. Wolf is a Trump loyalist, but last week he called on the president to condemn the violence. And major U.S. corporations are punishing congressional Republicans who tried to overturn Joe Biden's election victory. They're vowing to pull their campaign contributions following the riots at the Capitol. The companies range from Goldman Sachs to Dow Chemical to AT&T. Meanwhile, Hallmark is demanding that Senator Josh Hawley and Roger Marshall give the companies money back. In Germany, Chancellor Angela Merkel is warning the country may need up to another 10 weeks of lockdown. On a video call today, Merkel said that a strain of the virus that surfaced in the UK could lead to a rapid increase in Germany's contagion rates. Global News 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg. Tom.
Ritika, thanks so much. How about a data check? Let's do that right now. And it's about the yield in the market. Futures up 10, the VIX 23.24. But yields are really interesting. We're out at a 1.16 on the 10-year yield, 30-year bond at a 189. I don't know if we're on the 2% watch. I'll let you decide. Curve steepening is a real interest here. 1 percentage point difference in the 10-year and the 2-year. When was the last time we saw that? And Francine, I'll let you do the others, but the dollar showing that strength Morgan Stanley and Deutsche Bank are talking about.
Yeah, I think that's significant. It's probably one of the most significant market notes that we had from a lot of the banks. Now, global stocks seem to be stabilizing after losses we saw yesterday, Tom. If you look at the stock 600 here in Europe, it's pretty much little changed. I'm also looking at the mood across the markets, mildly positive. Investors continuing to assess how the rise in treasury yields actually change the financial landscape. And then Bitcoin, we must, as we learn about it, we must talk about Bitcoin. Prices resuming their advance, climbing above $35,000, Tom.
Very good. To Washington, our chief Washington correspondent on this historic Tuesday, Kevin Cirilli. Kevin, let's get out the date calendar right now, the famed Cirilli calendar. When will we see a second impeachment? Is that today or is it tomorrow?
Likely the vote will come tomorrow, and it comes, I think, really following a remarkable House Republican conference call yesterday in which Minority Leader Kevin McCarthy expressed to his caucus that the president does, in fact, bear some responsibility for the horrific attack on the Capitol last week. I mention this because it was almost as if, I'm told, he was saying to Republican members who feel that they would like to vote for impeachment that that's okay for them to do. That's a clear difference from the first impeachment, and it really sets up the question in the Senate for how many senators will come out to convict.
Right.
I will note, and this is important, that Senator